Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back. Good morning. Hope you're doing well in this crazy market. We've got CPI. CPI is going to be a big deal here today, though it's kind of a weird one because CPI, while still very important, has kind of been pushed to the side of the road, if you will, with all of the trade war drama and the the news that, of course, we got over the weekend, the 90-day pause between U.S. and China relations. And of course, the market loved that, right? The really excited the bulls, if you will, because now you've got at least, right, whether you think, that deal will be favorable towards China or favorable towards the U.S., the 90-day pause and an agreement to meet and, the step in the right direction is really all the market needed in order to get excited. And specifically, if you take a look at where we closed yesterday, we closed above this really consistently strong area of resistance, right? So this was a huge level of support. And just so you know, I'm just going to guess, I believe this was right around the 200-day moving average, but let me just check. I kind of forget. Yep, I remember that exactly. Yeah, so the yellow line here, guys, is the 200-day moving average. And notice how important this level was. This level was so important because it acted as huge support, right? This is where technicals do matter. Technicals matter quite a bit. We had a break of that. And when that failed, that was a big deal. And let me simplify my moving averages for a second, just so we have a clean view about what we're talking about. I'm really talking about what I believe to be the most important moving average of all of them, which is on the S&P 500 daily chart, the 200-day moving average. It is a very, very commonly referred to indicator, probably the most used indicator across the board in stock market world is the 200 daily moving average applied specifically to the S&P 500. So we hit that and we find support 1 day, Tuesday, 2 days, 3 days kind of, 4 days kind of, and then we fail, right? We fail, we come back to retest it, and sure enough, market turns around almost to a dime at that level of resistance once more. We collapsed from there, right? The technicals here were really weak when you got the confirmation that the 200-day moving average just was not going to hold. That price action was looking good, right? Things might be, oh, nope, failure there. And it was a complete meltdown from there. So the reason I'm bringing that up is that we now have seen what has been a really impressive bounce back. And the over the weekend news, the excitement that, hey, we're going to essentially pause and come back to this, but there was a good perceived victory on both sides of this, by the way. China and the US both took this home to their people respectively and said, we got to win on trade. And, both kind of came and said, we were closer than we thought we would be, and we're going to find a positive, way to move forward. And we're going to just pause and negotiate during this time. We're going to give time for negotiations. Again, does that guarantee that everything is going to be sunshine and rainbows between our, in between the two major rivals? Maybe, maybe not. But the point is that was all the market needed in the short run to break the 200-day moving average very decisively at that point. We came back to that same level where we rejected big time and we blasted through it. Many, banks even were putting out reports. Hey, this market is a sell. Be careful. Bank of America said short the stock market as it was falling apart. Horrible timing, right? But my point is, you can never trust. So I had somebody comment. I'm not even kidding. Somebody commented they made a huge case on why the market should go down because JP Morgan was bearish, right? And just because JP Morgan or Bank of America or a big institution like that has a take, it just goes to show you how difficult the markets are truly to predict. They're not hard, or they're not easy, right? They're very hard to call directly which way it's going to go, et cetera. So what I believe in is make an educated guess, manage risk. When you're wrong, admit it. And when you're right, try and make it count. So when I look at this 200-day moving average break to the upside, we closed above it. Price action looks excellent, but, and here's the big but. The big but is you have inflation coming out in 7 minutes. And this does matter. It matters substantially because there's two stories here at play, right? There's a big theme. There's a bigger picture here that some people are missing, which is the whole Trump administration's kind of idea that they want to administer to the U.S. national debt. They've built their campaign around that, which is an admirable goal for any president, but a really difficult one. This country is deeply enrooted in spending way more than it can afford to spend. But to the side for a second, I agree that I don't think anybody disagrees that we probably need to focus on our debt to some degree. Where people disagree strongly is how we do that. But and putting that to the side, the idea of the Trump administration, generally speaking, is we want to see interest rates get down. How do we get that? We get low oil prices, lower inflation. Fed's going to cut rates. That's the idea, right? Less war, lower oil prices, less inflation, the Fed's going to cut rates. And we'll sing Kumbaya together. That's the idea. Not a bad plan, just really hard to get it right. It is easier said than done than what I just described, right? Oil prices staying down is like trying to wrestle a bear when you're a 90-pound person. It's hard, right? Trying to control oil prices and trying to control inflation is not an easy task. I mean, the Fed has been, that's their whole mandate anyways, or half their mandate, right? The other is jobs. But we've got 5 minutes to go till CPI, and we're going to see where we're at with inflation. This is really important because year over year, we are expecting 2.4%. That is unchanged year over year numbers from the previous go around. Last time we had 2.4%. This time we're expecting 2.4%. Will we get 2.3? And let me ask you guys in the audience, give yourself a quick quiz. What happens to the dollar if we get a 2.3% inflation rate? Test your fundamental skills right now. Really quick, drop it in the chat. Does the dollar move higher? Does it move lower? Does it move sideways? What is the likely scenario? If you get soft inflation data. Okay, cool. So most people are getting that right. Dollar goes down most likely. Again, markets are crazy right now, so you get some weird reactions. But for the most part, a softening inflation data point, a true softening inflation would cause the dollar index to drop as probabilities for rate cuts would increase. Rate cuts are bearish for the currency 9 times out of 10. Okay, so what about if we go up? Obviously, the opposite is true. If inflation goes up, the Fed is not going to be very likely to cut interest rates, right? What does that do to the dollar? It makes it strong relative to its peers, especially Europe, for example, where they've been cutting interest rates like crazy, right? The euro, take a look at the euro, has had a recent resurgence with all the uncertainty around U.S. trade. But I am pretty cautious on this one. You guys know I was bullish here. I closed out because I did not. Once we had that UK deal and we had China deals ahead, I said, I don't know that I'm going to mess with that. And at the same time, I also had PMI numbers come in strong for the US. So there was some economic data that supported me just saying I'm too neutral to hold euro into a weekend where we could have some chaos. And we did. I mean, good chaos, not so good for the euro dollar exchange rate. And for gold, right, those things suffered, but most risk assets performed really well. The dollar index went up, right? So my point is, with the dollar index, am I bullish or bearish? Well, guys, I'm about to tell you, if we get a really hot inflation print, we are going to be likely higher from here. And my perspective on this would probably be bullish from here. Now, again, I'm kind of neutral on the dollar at this time. There's some stuff here that I like more or less on the dollar. But if I take a look, for example, at just major currency pairs, you can see that most of these currency crosses are neutral on the dollar. Euro dollar is getting a bullish reading, some COT data giving a boost here. GDP numbers were a miss for the US and maybe an upbeat for Europe. So there is a slight bullish, but this is only a +5. And what kind of concerns me about that reading is you have dollar yen right above it at a +6, saying to long the dollar here, be bearish the yen as a bias, right? Does that mean I go buy dollar yen? No, that's not how that works. I just look at the dollar yen with a bullish perspective. And when I do that, I say, hey, you know what? We've kind of got a price action breakout forming here, right? This person's saying that I'm on mute. If anybody can't hear me, please let me know, but I believe I'm fine. Anyways, so we'll see, but this price action has been very bearish for the dollar yen. And then we had the news this weekend, price pops higher. And I actually think that any pullbacks, I am more interested in yen shorts. So dollar yen, I'd be bullish on it, right? Anyways, guys, just a heads up really quick for you. I do want to just remind everybody that we are going to be dropping, well, you know what? I'll come back to this in just a second. I was going to say we'll drop our free Telegram channel link in a second, but we've got news coming out. I'll tell you more about that in a second. We're going to be doing some overhauling in the Telegram channel that I am really excited for. And I want to make sure everybody who's here is in the Telegram, and it's free to join, tons of free value. We'll drop the link and I'll talk more about that in just a second. In the meantime, we've got about 30 seconds to go until we have CPI data coming out. I have the SP500, the NASDAQ, the Russell, and the Dow Jones in our left-hand side. I have gold in the top for you, Bitcoin top right, dollar index is right here, and oil is in the bottom right. So we'll react to the news. We'll talk about it. Don't go anywhere. A lot of people leave right after the spike. Don't be one of them. We'll cover why this matters after the break. Coming in just after this. All right, initial reaction here. Dollar index not moving a whole lot. S&P just jumped. Let's see where we're at in terms of percentages. NASDAQ is up 0.3. S&P up 0.2. Dow Jones is fighting higher. Sort of a mixed reaction. I'm just going to guess that came in as expected. So my guess is we just got 2.4. Nope, 2.3 CPI month over month, and core came in soft. So we got 2.3% inflation. Interesting. So we did get this is a positive reaction considering we were negative in the morning. But actually kind of surprised. I would have thought that we'd be up a little bit more off of a 2.3%. Maybe that is foreshadowing for later today. I don't know, but a nice CPI print. We will take that 2.3%. So that would be, going back to our discussion, that would be soft for the US dollar, right? So soft for the dollar index. We would expect that to cool off a little bit here, keeping me decisively neutral on the dollar. If we had seen a hot print, I was telling you that I'd probably be looking to get bullish, but with a soft print, going to stay neutral, neither looking to long nor short US dollar crosses at this time, and still neutral on gold. Gold's reaction here, if we take a look at a 15-minute chart, is semi-muted. And I do want to just add a little bit of nuance to the conversation here today, because we have to consider, this is why, trading is, fundamentals are very important. At the end of the day, why we may not see such a big move on CPI right now is because the market simply cares way more about trade stuff, right? Is, what's next with the next trade deal? Is, the US and India going to make a deal? Or, what's going to happen in Japan and Europe with the trade, right? So that is the dominant headline right now. And I think it's always important, even if you're not a fundamental trader, you don't use economic data. I think it's really important that we make sure that even if you're purely technical, you understand what the guiding force on the fundamental side is at any given time. The guiding force of this market right now is trade, right? Trade, negotiations, who's making deals, who's not making deals, who's being problematic, and who's kind of working with the United States, et cetera, right? So that is what's guiding the market here. That's why when you're looking at a jobs report data point, when you're looking at an inflation data point, it's not maybe moving it as much as perhaps it was like, last year, or when we were kind of watching inflation so close, waiting for rate hikes or rate cuts, right? So that's my point, is just we see a CPI print like this. Is this good news? I would say yes. In fact, I personally take great, kind of solace, if you will, positive news here in this number. Market may not be, absolutely moving crazy like this, but this is excellent news in terms of the indices, in terms of risk assets. I wouldn't be surprised if stocks continue to move higher based on this. I wouldn't be surprised if Bitcoin continues to move higher on this. Gold may have a little bit of stabilizing here at these levels with cooling inflation. I don't necessarily think gold is super bullish at this time, but maybe just neutral on gold. We take a look at NASDAQ. Again, this may continue to help us fuel through some of these levels. However, we're stretched here. I'm not going to say otherwise. I think that I'm not bearish on the NASDAQ or S&P 500, but I do think a retest of support is completely normal. People will freak out. They say, oh my gosh, we're going back down. I think you need probably some healthy pullbacks within the context of this uptrend we've been seeing. What's up, man? Good to see you in the chat. Hope everybody's doing well this morning. And shout out for the Culture FX. Follow them on Instagram if you don't. Got some great content there. So, my thought process here with, FX, for example, we take a look at the dollar index. How does this impact the dollar? Well, it's a little bit of a soft print for inflation. Well, actually, it is a soft print. So it's probable that that would not be necessarily a catalyst for dollar to go higher. However, again, if you get some trade announcement, the dollar index could move higher. So my reading on the dollar is neutral. So I'll share with you why that is. Why am I neutral on the dollar? Well, you can see it right here. So the top setups, we're considering sentiment, technical, and economic data in this market. When we look at some of the economic data for the US, which we can do in its isolation by pulling up the economic heat map for the United States, let's do that really quick. So we look at the US and we say, where are we at with our US dollar impact score? If this number is, 75%, 80% of our metrics here are pointing towards dollar bullishness, then we would say, okay, this is a bullish dollar market. But at a 53%, that is smack dab in the middle. It's not super ugly for the US economy right now, and it is certainly not super amazing either. So here's the thing, right? If you're talking about how are we looking? Well, GDP numbers came in soft. They missed expectations. PMIs came in great, right? So PMIs were good. Retail sales were better than expected. This is hasn't loaded in the latest inflation data, but it's going to remain this color. We're going to see another blue report. We saw 2.3 where we were expecting 2.4. That will update shortly within the Edge Finder. Those are bearish things for the dollar, right? Remember, softening inflation is bearish. We'll get PCE data. That will be interesting to watch. Wage growth as well was worse than expected, which is, lower than expected, which is soft for the dollar index. So if you're trying to figure out, is the dollar bullish or bearish, and you're confused right now, look no further than the economic heat map. That will guide you, right? A lot of people get really lost in the sauce because they pay close attention to technicals, which is, respectable. But if you only look at technicals, you miss the story that's unfolding on the economic stuff, right? So if we're looking at the economic data and we're getting kind of a neutral reading, right? then there are probably just some better opportunities out there in my personal view. So I built this this table here. This is the economic surprise meter. This is fun because with the economic surprise meter here, we can isolate which currencies are showing upbeat economic data compared to their forecasts. So on this list, we're seeing New Zealand, the British pound, Australia. These are some of the ones that are relatively upbeat compared to forecasts in their economies. We contrast that to the dollar, which is really mixed, not too hot, not too cold, just our economic score here would be right in the middle. Japanese yen is the weakest of the majors, and the Canadian dollar is the second weakest. So our strong ones would be New Zealand, the British pound, and the Australian dollar. Our weak ones would be Japanese yen, the Canadian dollar, and the dollar. And what you'll notice is if you are an EdgeFinder user yourself, if you head over to our Top Setups Eco page and filter quickly for major currency pairs, and we can add minor currency pairs, what you will notice is that this chart will help you to select which currency pairs are sort of showing up generally on that economic surprise meter and potentially have some bias, right? Some strong bias. So a second ago, I mentioned that we're changing up things in our Telegram channel, and let me see if I can share that with you guys here a little bit more. So really quick, everybody who's watching the stream, if you are not in the Telegram channel right now, consider joining it. First of all, it is 100% free to join. The link has just been dropped in the chat right now. We've also got this linked in the description down below. So we recently have been doing some changes to the Telegram channel, and I think it's going to go a long way. We'll be doing a lot more chart markups. In the meantime, we have some stuff in the works that I can't yet disclose to everyone, but we're going to be having some new talent joining us at some point here to do some more markups. You guys, again, I'm not going to tease too much about that, but I think it will be very exciting. And I'm going to say this, I think this might be one of the most insightful Telegram channels on the internet for people who want to better understand fundamental analysis completely for free. So we've chosen some new talent to assist us with this process. I am also sharing my ideas, so you can see, if there's charts that I'm sharing, if there's things that I'm watching, like I did a CPI prep day here yesterday. This is completely free. So take a second, if you have not already, join our free Telegram channel and stay up to date with what we're watching. Even if you aren't able to join the show, this will give you a chance to, on the go, read up on what we're watching and thought processes that we're looking for. Okay. So what next? We have got, so we had a soft print, right? Soft inflation data this morning. And what's the reaction from the stock market? Not too much. Kind of interesting. I mean, actually, I take that back. It was a positive reaction because let's actually be fair to this and say we were down in the pre-market. We, at one point, were up about 0.75%. Now we're up about 0.5%. Is that a nothing move? It's not a big move. So I'm not gonna decorate this as a big win for the bulls, but it's certainly, in my opinion, from the macro, is a big win for the bulls. This is great. 2.3%. We are inching closer to the goal. We're inching closer to the 2% target that we have been working towards since COVID. Guys, 5 years. Can anybody else believe that? It's been 5 years since COVID-19, and we are still picking up the pieces, and we're still working back inflation. Inflation was below 2% before COVID. COVID really, people have their speculations, their conspiracies, all of this stuff about COVID. But what we can all agree on is it caused some serious challenges for everyone. And with COVID, there was some serious challenges in monetary policy, because what do you do if the supply line, let's just take for example, everybody may be familiar, a lot of my US friends specifically may be aware of like the price of eggs going crazy due to some supply issues, right? I don't know very much about this topic, but I know that there was like something that seriously disrupted the supply of eggs in the United States. I don't know if it was other places too. I imagine it probably was. So the supply, it's basic supply and demand, right? And I took one of the biggest regrets in my college years was that I took microeconomics instead of macroeconomics. And like it was one of my electives I chose because I was in computer science, so I didn't really get to do a whole lot of economic stuff. And that's not my my academic background at all. Economics has been something that I've, learned on the streets, if you will. But my background was in software engineering, and I could take an elective, and I wanted to take some sort of economics. And I chose to do microeconomics, which was still useful and still cool. But I always regret, dang, I wish I took macro because it would be way more. Not that I haven't learned a lot of the same stuff nowadays, but I would have enjoyed that class more, I think, based on, what I do today. Anyways, so here's the thing. In supply and demand, basic stuff. If you have declining supply, what does that do to the existing demand? Any other economics majors who are way more, intelligent than I am will know that you've seen this chart 7,396 times. And that's what that chart looks like it's a basic concept. So in COVID, we had massive cuts to supply because workers were sent home, ships stopped shipping, trucks stopped trucking, supply line issues were everywhere. And so what did that do to the demand for existing goods? Skyrocketed stuff, and prices went up. It was made, and I say this lightly because people needed, the money printing that gone on. I'm not here to dispute. We printed a ton of money to try and help people in that situation as well. And again, we probably should have helped a lot of people. But the point is, a tough situation was also stoked a little bit by printing a lot of money to, in theory, help people. And like I said, I think a lot of people did need that help. But a lot of people also took that and bought NFTs and Bitcoin and golf clubs, and they partied, they took a trip. So anyways, the stimulus checks, were they all used for essential needs? I'm not judging, but I'm pretty sure most people did not use it for that. But anyways, a lot of people did, and they needed that. But here's the thing. Not the point. The point is inflation was made to be a very, very prolonged and challenging problem. And so here we are at 2.3%. We went up to like almost 10%, 10% down to 2.3%. I do think that given such a challenging environment, the Fed has done a relatively good job. In my opinion, is that they should be left to finish what they've started. We're getting closer. I believe that we have our next show host. We have Alan coming on here next. Let me just see really quick. I just want to check the schedule. We got 8:45, Alan Perez coming on to take over the show. I'll say hello to Alan here in just a second. We'll roll to a quick break. Let me just remind everybody, I mentioned have some really exciting changes coming for the Telegram channel here at A1. My goal is to make it one of the most useful Telegram channels to everyone who is watching, whether you purchase something from my company someday or not at all. I don't care. I want to offer you this value in the hopes that it genuinely helps you in your trading. So we're going to do everything we can, put in a lot of time, energy, and effort into making this the best Telegram channel for people who want to stay up to date with the fundamental analysis, as well as some technical trade ideas each day. Join the Telegram channel. Just dropped a link here in the chat. We're going to take a quick break to thank a sponsor. And then up next, joining me on the show is Alan Perez. Stay tuned. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Good morning, everyone. Good afternoon, good night, wherever you are. This is why markets are tricky, guys. We had a higher than expected CPI print. Regardless, traders still continue to bet on the first Fed cut to come in September. And if you look at the Edge Finder, I remember this happening in February. It was supposed to be 2.9, ended up being 3%. And if you look at what happened, short-term rally in the dollar, but ultimately we went ahead and sold off on the dollar February 5th. Why? Because the market cares for other things. How you doing, Nick?
What's up, man? Yeah, no, that's a great point. Keep going.
Yeah. So, the main catalyst is this whole trade deal, specifically with US and China, right? Because those are two major economies that, even though them two are fighting, they really affect not just the two, but everyone. And so that's what the market is really caring for. So on February 5th, we got a higher than expected CPI print, yet the dollar continued to sell off, and that frustrated me. But it's always a good lesson to make sure what exactly the market is caring for. And, for back testing purposes, you can use the Edge Finder to kind of see how, previous CPI prints kind of go. Oh, shoot. How previous CPI prints went. And that's what I did pretty much this week. I went ahead and looked at what happened in the past. And I remembered, because I have this tool in front of me, and I was kind of expecting that the market may not really react too much for this one. Go ahead, Nick, while I fix this setup real quick.
Yeah, it is interesting just to think about, I was saying this earlier, it was like during like COVID, for example, it was all about, who's shutting down, right? You had this really like nuanced thing that was guiding the markets. The market is fascinating in that way, where it really obsesses over one thing at a time. It's kind of like the 24-hour news cycle, where back in COVID, some of you guys may not have been trading during this time, but here's a glimpse to the past. It was like a constant monitoring of that old map. Remember that map where it was like, where has COVID, where have instances of COVID have been spreading, the old like map that they would always show up on the screen. Well, at the time, it was constantly monitoring, the markets were constantly monitoring like policies from governments and from businesses, and that map to see, is this thing worsening or is this thing improving? And also, what are the stances of governments? Because everybody knows, from a purely just a financial, economic, macro situation, if economies open back up sooner, it's going to be good for those economies. And if they stay closed or stay shut for longer, it is going to hurt those economies. That was the obsession at that time. Now we're living in an environment where it is constantly chasing Trump and what he's doing and what his, next trade deal or whatever is going to be. And it is just fascinating. I think, though, Alan, here's something I kind of take a bit of solace in, is like that narrative changes constantly. And it's really difficult to build a trading strategy around that. So I go back to kind of old reliable, which is the economic data and like where it lands, because that stuff is going to be very noisy. I can't predict when Trump is going to say something outlandish, or he's going to, have a disagreement, or he's going to agree and make a deal with somebody. Like, I can't predict that. But what I can do is I can look at the inflation data. I can look at GDP growth. I can look at PMIs. I can get a general sense of whatever we throw at the US economy or whatever we throw at the European economy. Can it stomach it? Can it handle it well, or can it not? And that's where I really kind of focus my my actual decision making. There are criticisms to that. You could point out that the market doesn't really care about those things at this time, so why are you paying attention to it? But that is what's worked for me over the years, is to really just kind of pay attention to the stuff that I can kind of track consistently and build a strategy around.
Yeah, and ultimately that's what the Fed looks at, right? So if we see some more better prints in CPI, maybe in the short term, sure, the market may not react to how it's supposed to react, right? But if you kind of keep that in mind, right, and we have the tools for that, and you see that numbers are looking better for the US, well, then that's when you can kind of say, like, right now where DXY is at the 1014, 1015, you can start to say, okay, 102 seems to be like a potential area of resistance. What happens if we break past that? Maybe 103. And then by then, when we get to those areas, you can kind of see like, okay, maybe the Fed has confidence, because we know that they look at CPI. We know that they look at growth. And then you can start looking for areas to kind of go ahead and flip positions, because we still haven't cut rates like everyone else has.
Yep, absolutely. Well, Alan, I'm gonna leave you to take over the show here for a little bit. Just wanted to say hello and share that thought with you. For everybody who is hanging out and enjoying the commentary, do me a big favor. Make sure to go subscribe to Alan's YouTube channel. He's got his own channel. He's growing it. I've been watching his content, doing a great job so far. It is more free value for those looking to, learn more about fundamental analysis. Here is the channel. It is Aspire Trading Co. Go check it out. Make sure to go subscribe. Alan, you've got the show for a little bit. Thanks for speaking with me, and have a nice stream.
All righty, man. Thank you. Have a good one. So, kind of little overview as to, what the market's looking at. I have the DXY pulled up. Let me go down to like a 1 hour just so we can see how it's reacting. Not really much in my opinion, right? Earlier today, we were pretty much in this area. Looks like we got a flush down, but we're starting to retrace. Oh, I'm on the 5 minute. Did not mean to do that. If we do kind of close and fill this bearish candle with a positive bullish candle, then we could see a little bit more upside. Couple things about CPI and pretty much what the street is thinking when it comes to these prints is that although tariffs did hit, momentarily, and certain businesses were taking precautions to kind of go ahead and hedge against that, because of the 90-day tariff pause, a lot of businesses or a lot of industries really didn't get affected that much yet. So a lot of people are waiting for more prints to kind of see if, those negative tariff uncertainties were actually implemented and businesses felt that. So that may be why also this print got a little bit of a kick to the side. But nonetheless, like Nick said, and like I agree on, a lower CPI print is a lower CPI print. And that's what the Fed's going to be looking for. So if we get more positive prints, then we can see, then we can start looking at the chart and say, okay, let's go ahead and look for some bearish setups on the DXY. Ultimately, that's probably going to be my move for like the second half of the year. I mean, you can see on Financial Juice, apparently, right? Traders continue to bet on the first rate cut being at September. If you look at Fed Watch Tool, June is pretty much off the table at a 91% chance that we're going to hold rates. If you look at July, it's a 61% chance. So depending on new figures that come in, this could sway a little bit. If we start seeing that, we get like a bad print in jobs or growth, we could see that this is going to grow from 61 to higher. But this tends to fluctuate. So this is a good tool to kind of see and kind of time, I guess you could say, when it'll be time to start shorting the dollar. So I'll go over my positions. Any questions, guys, please send them my way. I love to answer them. H-ball out. Haven't really tracked FX for 2025. Yep. I used to track stock earning calls, but stop quickly. All right. So I'll go over my positions real quick. Euro dollar, selling euro dollar, looking for somewhere in this area. If we just take this fib from high to low, let me go to the daily chart here. Let me also get rid of this. Only future events. Cool. Then I will want to target, somewhere around the 50% retracement level. So this is my position on the euro dollar. Sold when we were in this range, when we failed to break above this resistance zone. We're making new lower highs. So I'm going to trail my stops with these lower highs. So if we kind of solidify, kind of flush down from here, I'll probably trail something like this. Dollar yen, a trade that I really liked. I have a good price on it, so that's why I stuck through it. Bought at this support zone here at the 140 handle. We tested it 1, 2, 3, ultimately 4 times. And now we have passed this level. So I'll probably look for trail stops. I didn't trail stops before this because the CPI print could have had some volatility. And I tend to ignore the noise sometimes. So unless it's like a figure that's a very obvious, like, okay, this is going to invalidate the trade or the system, then I will go ahead and close manually. But this is my US dollar yen trade. Ultimately, I'm going to target the 150 handle to the 149 area here. This is the pre-sell-off to the April 2nd move. So whenever price was consolidating before April 2nd, when Trump announced his tariffs, It was a 10% baseline tariff. Actually, the dollar rallied on that. But whenever he said that it's going to be a 50% reciprocal to everyone, then everything sold off. So I'm pretty much targeting these levels here. We're pretty close. If we break above this level that I think is going to be resistance, then I'll just trail my stop right here. Dollar Swiss, good trade for me as well. We were in this range, broke, making new highs. This resistance level turned into support. I actually trailed my stop. If you guys reference my previous live streams or previous videos of mine, I was bought in here and I was trailing right below the support zone. I actually got wicked out of it on Fed Day on Wednesday. But when I kind of was listening to it, read the narrative, I kind of was like, okay, this is pretty hawkish here. So I re-entered. I'm up 200 pips on this one. This gap was a little bit concerning for me, but gaps don't always fill right away. Sometimes they continue. So I'm just being mindful of this zone. If we kind of get a good close, I'm looking to target ultimately 8,500 or 85.5 as a take profit for dollar Swiss here. Dollar Canadian. I might get out of this one prematurely. I didn't like how it was acting initially. It was just chopping. The correlations with oil weren't really working out really well. We stayed above in this channel here. If we kind of zoom out here, upward channel, we never broke below, which is why I stuck with it. But it's it kind of lags behind. So if we kind of hit this resistance zone early on, or even maybe somewhere right here, I'll just take it. I'm not really a fan of dollar Canadian, to be honest. But for the most part, my view is going to be dollar bullishness until we get some signs that the Fed is more confident, or more prints that the Fed is more confident to go ahead and cut rates. And then I will go ahead and start, flipping positions, taking profits, and looking for price action that kind of confirms a good risk to reward setup. But with that, guys, those are my current positions here. Dollar, let's look at dollar, what it's doing post release. Just hanging out there still in this area. Yeah, I'm interested to see if we start seeing some flush downs, then I'll just probably just get out of my trades and just wait. Honestly, that's probably what I'll do. So if we start breaking and start flashing and start filling this pocket, then yeah, I'll just take my profits and hang out and wait for another setup somewhere else. But yeah, any questions? What do you guys think of this print? Was it a surprise that price was kind of not reacting traditionally, or are you guys pretty much like, yeah, I expected this to happen? Let me look at the top setups page real quick. And world currency strength. Okay. Top setups. Top setups eco. I like the eco for sure. Exclude miners. Okay, so we got New Zealand euro up, but we got dollar yen approaching, dollar CAD approaching, dollar Swiss is neutral. Gold is still bearish. Jose Walker, any gold predictions? Actually, yeah, I do, even though I don't trade gold actively. I actually did have an opinion on it. So I did say last time, if we kind of approach this level and break it, then there is, terms of us kind of breaking down lower, and a spot like 2,900 for all the gold traders out there, I think would be a good swing area, in my opinion. Not financial advice, but I think that would be a really good spot. You could say that this is a double top pattern with the fact that uncertainty is coming down. We have, progress in trade deals. That's another thing, right? The recent talks with China weren't a trade deal at all. It was just the beginning of one. So the fact that just the beginning of one brought this really big rally, and we got numbers of like it was a 145% tariff on China, got down to 30%, right? And then China's charging us 10%. That in specific industries, that was good news, so much that caused all this less of a demand for safe havens. So let's say we continue that route, we get another country or two that comes out with trade deals, or China kind of solidifies their relationship, then yeah, gold is not going to be needed as much, right? It's going to be more risk on, and risk on assets are things like stocks, right? Things like Bitcoin. which is up right now. Pretty much we're close to all-time highs. I didn't check Bitcoin until right now, but yeah, we're pretty much approaching all-time highs. So that is a very risk-on thing to see. So with gold, this is a very important level in my opinion, the 3250. If we break this, then yeah, we could fill this pocket, and then we can just re-enter somewhere else like this. Average monthly performance is like 2.5% lowers year to date. Yeah. Are you an indices guy? Not trading, but I am like in longer term. Yeah, I think the way I approach long term investing is the simpler the better. So allocating indices, gold. I want to do more Bitcoin, or want to start doing Bitcoin, because I honestly don't. I'm not as advanced in the topic as I probably should be. Gold is bullish. This happens every month. Let me see what oil's doing. Oil, I see oil's up. Yeah, oil's coming back up to this resistance level. I don't know if we react off of this and flush lower, then dollar Canadian could be still a good trade for me. I don't know, but I think I might just still take it out. This market is manipulated. I don't know if it's manipulated. I think the market just reacts to what's important, or what overall consensus is. Buy gold. I mean, yes and no. If you're buying gold with heavy size and the only thing your trade account can swallow is a couple pips stop loss, then no, because you have so much room to the downside, but you could say infinite amount of upside, but that's only relative to what's going on in the world. If you're buying gold, you can swallow it going all the way down to 2,200, just for example, right? Just example. If you can swallow it going all the way down to 2,000s, and your time horizon is 30 years, then sure, you can buy gold right now and go ahead. I don't have a Telegram. I don't, but I think that could be a possibility, guys. If I can help give some written insights, frequently for you guys, I love to do that. Those are things I do regardless on a daily basis. You just keep up with this stuff. So it could be very, if it's helpful for you guys, I mean, you guys let me know. Do you think written analysis would be helpful? Like, this is one that I marked up. If I can share this, I did like a basic trade idea on one of the trades that I took, which was this dollar yen trade. Pretty much the basis for it. Am I allowed to share this, Chandler? Like a trade mock-up that I did. Basically what I did was did a markup, right? Or a signal, or whatever, however you want to take it, of my trade idea for dollar yen, my basis for it, what I was expecting to happen, things to watch out for, and just some overall context of, how this trade could go and stuff like that. And it's working out okay. We're pretty much approaching the take profit pretty shortly if we do continue to see more bullish things for the dollar. And so, yeah, I plan on doing that for you guys for free if the time allows and everything. But I'm interested in if you guys will be interested in that for sure. CPI is lower than forecasted, which means the Fed is least likely to raise interest rates. So gold value will go up naturally. Well, if the CPI is lower than expected, then lower CPI actually gives the Fed more, I would say, more confidence to go ahead and cut rates if inflation is getting closer to their target. Absolutely, James, Matthew, cool. Yeah, so I think I probably should get a Telegram because I think that's the platform that those that type of content is on. Alan, do you think the Fed will cut soon? So last meeting, the Fed said that they're in a position where they have the luxury of waiting, right? Which is a really big hint of them saying, look, we need more data, more data dependent, right? It's what they always say. So I think that they're waiting for a couple more prints. Maybe come July or September, they can start to actually move the needle. And you can see that on the CME Fed Watch tool. So if you guys don't know this is a CMEgroup.com free tool. Basically gives you a rundown of what the market is expecting for interest rates. So if we go June, right? Right now we are in this range, the 42.5 to 450, right? 91% chance that rates are going to stay in this level. So on June 18th, right, we can pretty much expect for rates to, stay as they are. Now, let's say we get something different, something that gets thrown out to the market that makes a shift, right? Then this can go down and this bar can go up. And so these are basically the odds for when rates are going to shift. You go to July, currently 63% chance that the Fed is going to hold rates in July, and a 34% chance that they're going to cut, and a 2.6% chance that they're going to cut big. September, October, so on and so forth. So that is pretty much a really good tool to reference as far as like, okay, is Fed going to cut this time or not? People don't understand that the economy of California and Florida alone is the size of the economy of Latin America. Yeah, those are humongous economies. Hi, Cheryl. How you doing? I'm not sure how to pronounce your name. I'm going to say Sajid. This year, you bought a kilogram of gold, but suddenly the gold price is falling down. What should I do now? Sajid, I'm assuming you bought physical gold, right? Or you can correct me. Are you trading or you bought a physical thing of gold? And if I could also ask if you are going to planning on reselling it or holding it for the long term. Because I think if you're holding it for the long term, you shouldn't really be too much affected. Gold is one of those assets where it just tends to go up over time. Limited supply, demand is there, especially in times like these. If your time horizon's longer than 5 years, then I think you're pretty much solid. Like you're fine. But if you were, if you invested a lot of money into the gold and you were trying to resell it relatively quickly, then you are at risk of those price fluctuations. New all-time high in gold, be prepared, I think. Ramat, anything can happen for sure. And, if we get more uncertainties, let's say that thing with China falls through, tensions go up, they start going at it again, then yeah, I think there could be a very strong demand for safe havens. And that could definitely happen. Ball out, I agree with you as well. I agree 1,000%, honestly. I think the September mark is a pretty good month to maybe start looking to see if if it's possible to start cutting those rates, but yeah. OT, thank you. All I was looking for, it's not hard. Anyone can do it. Look, this level was a level that we held multiple times, right? And it was just a 140 mark. If you look at any order book, like if your FX broker has an order book or whatever, or even the futures, right? If you look at futures, it's a centralized exchange, so you can see order flow. 140 was stacked with orders. We held it 4 times. We got a glimpse, like at this level here, we got a glimpse that, meetings are going to be made with China. India was already in the talks, right? So yeah, this was my premise of like, okay, maybe we get less of a demand for safe havens, good thing for the dollar, good thing for US assets. I was saying that a lot of people flocked out of US dollar, whether it be from the stocks or from just the US dollar in general. And if we do go ahead and see more optimism in the US, all of those foreign investors are going to have to reconvert their foreign currency back into US dollars. And so that's why, usually the correlation is stocks up, dollar down. But right now we're not seeing that. We're seeing both of them go up, and sometimes that does happen. And that was pretty much my premise was, okay, less demand for safe havens, more inflows in the US dollar, potentially trade deals happening, and we can kind of go ahead and reverse this whole sell-off that happened on April 2nd. And so that was my trade. We continued making you higher lows. And then whenever we kind of broke past this level here, we held it pretty nicely. I added again to the position. And I'm not going to do the same over here because I don't want to bring my average price up. If I were to add, if we break past this level, then my average price is going to be higher, and I don't want that. I'd rather keep my average fill price low, give it time to do its thing, and just take my profits, you know? Bashy, how are you doing, man? You missed pretty much the whole thing, the whole spiel and deal. Come on, man. But I will say this was an earlier stream. Alan, and I say that because Powell has done the same thing. I think last year he didn't cut in the summer. Oh, yeah, for sure. Yeah, he's just very day dependent. He'll take it slow, nice and slow. Any markets, guys, you guys want me to look for? Yeah, Bashy, I know you're building up that car. You're ready to go. Let me see one thing. I remember you guys were interested in Aussie yen. Let me include miners here. Aussie yen's getting a 2. Top setup. Let me just do this. I'll switch all of these off. Ooh, very bullish. So I know one trade that we had on the lookout was an Aussie yen short. Now I think that is no longer in play, especially with the yen not being super hawkish like they were before, right? Before, remember that Swiss yen trade that we were in, or that I was in? I was up like 300 pips, and then the whole dynamic shifted. Yen was actually not going to be as hawkish as we all thought, and so that was a loss. Well, then we kind of went ahead and reevaluated at maybe shorting Aussie yen. It was a good setup technically. I never took this trade, but we were on this downtrend here. I said that this would be my first stab with the hopes of it coming down here. Now with the yen being a little bit more dovish, I don't think this is a good trade anymore. And if we look at the edge finder here, we see where is it at? I just saw a +7 reading for Aussie yen. So this is where you can look at your trade idea that you had, right? Aussie yen was a good one technically and everything, fundamentally as well before. Verify it with the edge finder, +7 reading. I wouldn't be surprised if we just chug higher from here. So we're going to scratch this one from the list. And that is the beauty of having a system. Bashy CPI was lower than expected. However, if we look at the dollar, let me just revisit. It's pretty much doing nothing. It's still here. If we get a flush down, then I'll probably exit my positions. But dollar is pretty quiet. Seems like the market's caring for other things at the moment. Ernest, I'm not Nick. I'm Alan, but nice to meet you. If you're a new viewer, consider subscribing. Consider subscribing to my channel as well. If you guys want some free content like this. How is CPI data going to affect oil prices, Alan? Well, lower oil prices is actually good for CPI. Lower oil prices means that oil trickles down into everything that we do. So if oil prices are down, transporting costs can be down and stuff like that. And so people or consumers or grocery stores can go ahead and sell prices for cheaper. So lower oil is actually pretty good for inflation. Say we get a spike in oil prices, which I don't see happening here, then inflation can continue to go up. So this actually could be, a good effect on CPI. This price action that we see here, lower oil, lower CPI. Oh, we got Forex James ready to go. Forex James, popular guy here. Usually I say don't leave, but I doubt you guys will. He's a fan favorite and really good at FX. Thank you guys so much for watching me, and consider subscribing to my channel. Thank you guys and have a blessed one. Bye-bye.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey guys, how's everyone doing? Hope you're well. It's only Tuesday. CPI was pretty flat, really came out at 2.3, down from 2.4, so 0.1 change, but yeah, really not that eventful, to be quite honest with you. I don't see that having really any influence on the outlook for the dollar. As we already know, the Fed is very, very cautious around tariffs, so having a slightly lower CPI by 0.1, yeah, really, really unlikely to actually sway anything. So I'm actually a little bit in a bad mood. Not really, but I'm a little bit salty. So I put out a video on Sunday, as I always do, just going over my watch list and what I think the markets could be doing. I wake up Monday morning and it's all pretty much there. Euro dollar sank, dollar Swiss is up, oil's up, euro pound's down, pound dollar's down, New Zealand dollar's down. So missed all of it, as you know, of course, typical. But that's just trading sometimes, you know. I'm not normally, you know, you could argue, oh, well, should have been up for market open. I don't, even if I was awake for market open, there's no way I'm going to place a trade as soon as they open after the weekend, especially after they gapped. And then by the time it was Monday morning, they'd already moved too much for me to get in. So now it's just a waiting game. A lot of the markets are actually showing gaps at the moment. Like here on euro dollar, we've got the gap. On gold, we've got a gap here as well. So now I'm just waiting for these gaps to get filled, and then I'll be looking to actually get into these trades. I still love the idea of dollar bullishness. I haven't seen anything to really change that at the moment. So yeah, we'll see if that can ride into something. Rennis, I do agree. I think we could definitely see gold come down now. I think it's a lot of the steam that was driving gold to the upside is pretty much over. I mean, tariffs seem to be doing okay in terms of developments. There's no rise in geopolitical things in terms of Middle East, Russia, Ukraine, Pakistan and India seem to have you know, that was like a blip. It's not really done anything. So yeah, I mean, Fed's holding rates as well. So that, yeah, no reason really to be a bull on gold in my view right now. Quang, I just saw your message. I'm on the schedule now. Ball out, hello, good to see you. OT, hello. Pound dollar pullback. Yeah, I would expect so. Just like euro dollar, I would expect a lot of this left side to get corrected. Same thing, yeah, on pound dollar here. I think the pound is slightly more supported than the euro right now in a central bank terms, but I do think it will follow euro dollar down, but it might just be a lagger. I think euro dollar will be the one to sort of lead the way in dollar crosses to come down. I'm telling you, on a 6-figure plus account, that's like almost guaranteed returns with defined risk. That's like the next go-to master in trading. Oh, spread chain, like okay, I see what you're saying. Yeah, I don't trade that far. I'm not a super intelligent guy. I look at the basics and make money from that. James, what do you mean I place trades a second after market opens? Yeah, great. I used to do that. I used to set pending orders on a Sunday night as soon as the market opened. I only did this for a couple of weeks, and it was awful. Rather than, I had an idea, and this was back when I was doing freelance work and contracting and things, so I wasn't at the charts all the time like I am now. So if the market's opened, I would set a buy or sell limit or an order, whatever type it may be, and then I would just not check the charts for the next week. And yeah, that in theory sounds great because you've got no emotional input. Your orders are set, so the entry criteria is solid. But in reality, did not work at all. Lee, hello. How are you doing? I'm looking to re-enter oil. Do you have any idea on pullbacks? Not really. I think the markets are still kind of settling. We've still got a lot of the momentum that we started the week with. So yeah, I think, yeah, no entry right now. I had a very similar idea to Nick, actually. I think it was Friday, actually, that I think Nick and I had a very, very similar idea on oil. Although I don't think I was on stream, actually. I'm not sure. Can't remember. But I know he was looking to buy oil on this pullback, and I was as well. But I just didn't get a deep enough retracement. And then obviously I don't trade late Friday anyway, so didn't catch anything. Then market opened and missed the whole thing. So that's sad. But in terms of re-entry or another entry, yeah, no idea, to be honest. Would really assess it at the time because I don't really have an entry criteria with the market at the moment. So we just had this small pullback, so it kind of invalidates me drawing a fib from low to high because this is now the new low. So yeah, tricky. OPEC report, yes. I don't trade oil that much, so things like that, like OPEC report, to be honest, wasn't even in my mind. So yeah, that's another reason I'm not too invested in taking trades on things like oil, platinum, and other commodities that I just don't really pay attention to. I disagree with you, James. The EU gets lower than the buys are better and S&D is better. But why? I don't see any reason to buy euro dollar. Do you get the feels when you think about unicorn knees and toe breaker gaps? I have no idea what you're talking about, Sean. Lay off the LSD. What's your plan on dollar Swiss? Well, it kind of is the same as what I've already got drawn up here. Let me just do a quick checkup. Yeah, so it's here. I'm just cautious of this weekly low being used as a new resistance. Fundamentally, I am bullish, yes, but this is a strong weekly level. We've seen a bit of selling pressure come in here. So to be honest, I think I would take a first entry probably on this gap fill, as I've already said, so back where my initial entry was, because this would also provide a really nice break and retest. So obviously we've already broken, have a retest down here, enter long, and potentially come back. We've still got a lot of left side here to possibly correct. We've got, let's just see, what is that? So yeah, almost 6.5%, 7% that we could still come up on dollar Swiss in the short term. So we'll see. Any aggressive selling area gold? Not right now. No, it's too low. I don't want to sell into this double bottom. I know I'm bearish on gold, but I still need to have some respect for it. You know, it's had a huge rise, and I'm very cautious about selling into this in the long term. So I would rather optimize the entry and just wait. So I'm not going to sell into this level here. I think that'd be a little bit too aggressive. I know you said aggressive, but that's too much for me. So whether it's a retest of here or whether it's just a fill of this gap, maybe it's a retest of this trend line, I don't know. We'll see. I'm not in a position where, because things are a bit up in the air still with tariffs, I'm not going to sit here and try and over-analyze charts. I'm just going to sit and wait and see what comes to light. What do you think about dollar yen? I think Alan's in dollar yen longs, if I saw it correctly. I think he's got a great idea there. I think his trades were also in profit, which obviously is a reflection of that. Sorry, 1 second. I just need to quickly check this. Okay, cool. So yeah, I think dollar yen longs are also a great idea. So we've got, in my view, the dollar is in a position where it can go a lot higher. We're switching out of that risk off sentiment, which did drive the yen and the Swiss pretty well, actually. So I think there's a lot of room for that to get repriced back to the downside as we come out of this risk on environment, as we get a bit more optimism, which obviously would send dollar yen much higher. I was for a while saying that dollar yen was a clear sell below 150. I've completely changed that idea now. We had Nomura Research, or the institution that were short. I think they actually shorted right here. They got a sniper stop loss because their trade was something along these lines. Entry here, stop loss there, and on market open they just got liquidated ASAP. As for an entry though, it's a little bit tricky. So again, because we've got this market gap, I'm a little bit cautious. So let's just see what that constitute. Actually, that would be perfect. So if we draw the fib from low to high here, we could see this 50% level get hit. That would also fill in this gap. Then we could possibly see higher prices. Now, I'm not looking to really take this too high just yet. I think reasonable target would just be at 150.1 and see if we can break above there. For dollar yen, I'd probably just use a trailing stop rather than a hard take profit, to be honest with you. I think we could see possibly a runner. I'm still bearish long term. I think the yen still is undervalued, but again, that, I've been saying it, I think that's more of an idea for the next 1 to 2 years rather than a short-term swing trade. So yeah, pretty simple. Yeah, please don't spam with question marks. To be honest, that just annoys me, and it just increases the chance that I'm not going to cover what you asked me to do. I'm not some girl on Snapchat that's ignoring you. Didn't know big institutions take SL2. ARC institutions are actually pretty crap at trading, excuse my language. Their analysis is amazing. So if you look at somewhere like, in fact, actually, I was going to show this to you on stream and I completely forgot. Let me just try and find it quickly. And this is one of those reasons you just don't put institutions on a pedestal. Just give me a second. Let me see here. Yeah, so this is Credit Agricole. Actually, let me just open it properly so you can see it fully. Here, so this is Credit Agricole. So you can see they win award. They are quite literally some of the best analysts on the planet, especially for G10. But if we just ignore their capabilities to analyze the markets and just focus on their execution, for comparing to sort of the better side of retail traders, their performance is really not that great. Returns 2024 to date, they've returned just under 12%. I mean, you could say yes, compared to benchmark indexes such as the S&P, that's actually very good. But yeah, the returns just don't warrant the pedestal that retail put them on. Yes, for research, again, research is spot on. It's very, very good, but their ability to trade is quite poor. And it's not, obviously, I'm not saying they're not good traders. They've got very talented people, some of the best people in the world, but they're obviously tied by risk constraints, compliance, clients, things like that. So it's not really the same, but obviously if you're going to invest somewhere, I would rather invest with retail rather than an institution. Obviously, again, there are deeper aspects such as exposure limits, drawdowns, hedging, or anyway, hopefully you get the point. What advice do you have for a trader like me who scalps, day trades, and swings? Don't do all three, pretty simply. Find whatever makes you the most money or whatever you're the best at and just focus on that one. I would say focusing on too many strategies and too many things, it just rips your attention away from the main one. So like if you're really, really good at day trading or swing trading, but you sat there through London and New York and you're just losing 2%, like what's the point? Just focus on what you're good at. And if you're good at all three, then fine, make money with all three. But my general suggestion would be to just focus on one or two strategies. And those one or two strategies more should be for high and low vol rather than being for different timeframes. Because if you just got out of London session and you need to plan a swing trade or a day trade, but then you've got New York coming up and you need to scalp that one, your attention is just all over the place and you're not going to be able to optimize really where you should be. What's their drawdown exposure level? I don't know what their risk limits are, to be honest with you. Generally speaking, they'll allocate somewhere like, well, yeah, I don't know, actually. I can't really answer that, because each trader will have a certain amount, so they won't allocate all the traders the same amount of capital. Obviously, juniors might have a couple of million, whereas the seniors and the higher up people will have tens, hundreds of millions. So it's, yeah, not sure. And it will vary institution to institution, I would assume. I don't see an entry in euro dollar, neither do I. I think it's just too overpriced. There is just no reason for euro dollar to be at the price. Actually, maybe now it's slightly rebalanced a little bit, but here, yeah, there is no reason. Euro is just not that great. It's bolstered heavily by capital flows from when the dollar was weak. Obviously, people selling dollar, buying the next liquidity asset, which was euro. That was like the main driver. There's no, yeah, I mean, we've even got the central bank divergence now. We've got the ECB that's quite dovish and are expected to cut again. They've already cut 25 basis points. We've got the Federal Reserve that held rates and not planning at the moment to cut rates anymore until we've got clarity on tariffs. So, and they were quite hawkish, I would say, neutral to hawkish in their tone. So, a very nice central bank divergence there for us to capitalize on. How do you see what Credit Agricole is buying and selling? Give Credit Agricole 25 million and become a client, and they'll send you the reports on a daily basis. Or just join Elite Traders, where we send the bank reports every day. It depends what you're into. Okay. Samuel, I just answered you. I'm not going to do it again. Let's just have a look on the Edge Finder. I've not really checked the Edge Finder today. Let's see what we're getting. See if we've got any goodies we can make some money on. Dow is still bullish. UK 100 still very bullish. The S&P, the Nasdaq. Actually makes a lot of sense. So if we're switching from risk off to risk on, you obviously would want to really be looking for the indices, which we've got. Sell yen makes sense. New Zealand dollar, I'm not 100% sure on. It seems like their fundamentals are actually quite weak. From my analysis, obviously not according to the Edge Finder. Dollar yen bullish, oil's bullish, Bitcoin, yeah, it makes a lot of sense actually. Also, my cat's here. I'm not sure if he's going to start being a nuisance or not. We'll see. Thoughts on Swiss yen? Swiss yen, yeah, makes sense for it to start looking to go higher, to be honest with you, which pains me to say a little bit, but then there's the other side of me that is quite happy for it to go higher so I can just sell again. We're still in this weekly range, and we have been since pretty much over a year, since January 2024. This market's not really done anything. I'm still happy to sell it. Again, I think long term, in the next 1, 2, 3 years, Swiss yen's got a lot of room to come down. Remember, the Bank of Japan is on the path to normalization. They're pretty dovish right now, but again, I don't really care about right now. I care about the next couple of years. The S&P is still expected to go down at least to neutral rates, if not negative rates. That's not being ruled out. They have kind of dodged that question. So we'll see about that. Their inflation is very, very low. But yeah, short term, I would be waiting for a break. I'd be waiting for a break of this level. So if we could see slightly higher, possible retest, then start looking to go long. And that would be back into here. So yeah, possibly back into this level actually when we had that was the intervention back in July, August? Yeah, July. So we might see that level get retested again, but who knows? ECB rate cuts priced in yet? Yes, probably. It happens very quickly. What about gold? Fall or high? I would expect it to fall. Although short term, probably in the next couple of days, it might gain some value back just as we pull back into this gap. But I would expect longer term, sort of medium term, for it to head downwards. New Zealand yen, I've got no interest in. I don't really like the New Zealand dollar right now. However, Aussie yen, also not really a fan of the Aussie, but I think it's got a little bit more potential than New Zealand. So I would be looking to take a long position on this gap fill, then continue higher. So we'll see if we can get that. Again, I would expect the yen to gain some short-term value into some long-term weakness, but yeah. I'm keeping my trading very, very simple at the moment. You might have noticed I'm not really doing that much. It's just because, I'll be honest, I think the markets are very clear. I've got a very, very clear view of what I'm expecting to happen, what I want to happen. And at the moment, there is nothing I can do other than wait. So far, the markets are working as I completely expected. So yeah, it's now a case of just waiting for pullbacks to fill the gaps and then continue in the direction. Samuel, don't worry. All good. Okay, let me just check. I'm not sure if this is a half an hour or a 1 hour segment today. Okay, so it's 1 hour, so I'm until 10:15. Then we've got Chris. Sweet. Caden, hello. Good to see you. Sorry, guys. I've got a couple of things I need to pay attention to going on. I'm just making sure I'm not missing things on the business side. Okay. You know, it's funny. I had my first haters today. I was saying, I think it was last week on one of my streams, that I don't really ever get people coming in. I get criticism. Obviously, that's completely normal, no problem. But like actual hate, I've never had that in my own stream. And today we got 2 of them. It was like Pokemon collecting. So that was quite interesting. So yeah, fun start to the day. Yeah, I really like. I'm going to add dollar yen. I think it's already on the watch list actually. Oh, it's not. I need to add that. I really like this level to potentially take this long. We'll do this. So yeah, we'll see if we can get some sort of setup along these lines. I think that's a very, very solid one to look for. You ask it? Yeah, I think I did. I spoke it into existence. Started setting alerts as well. I've noticed a lot of the times when I'm on these streams, I'll be looking at charts, but because there's often quite a few things to go over, I don't really give it that much thought into actually taking the trade myself. It's more just for you guys. And then I'll go back like a week later and the trade was quite good. But obviously because I kind of don't really store it in memory, I forget about it. So started setting alerts on them. So at least then I can actually keep up with my own ideas. Oh, let's have a look at the Dow. I also kind of put the Dow on the sidelines, but again, I'd need to see this gap get filled. I don't like going into a trade when a gap is left open, especially, I mean, stocks is slightly different. I don't trade stocks, but gaps are very common to have in stocks. But in things like the Dow and currency pairs, normally we do get them filled. Like euro dollar statistically will fill the weekend gap or the market open gap. I think it's actually, let me just double check. I've got it here. Here, when euro dollar opens with a weekend gap, there's a 63 to 68% probability that it fills the gap by the end of the day. It doesn't. I don't have any stats on, you know, if it doesn't close by the end of the day, but it's something to keep in mind. So, yeah, I think it was someone who didn't really know, you know, me or what I do came in and they were like, basically call me a scammer and a course seller. First of all, never scammed a single person in my life. And I don't have any courses for sale. So there was that. And then I showed him basically the Discord. In fact, you know what? I'll show you guys. Unfortunately, I can't show you the full thing because it's proprietary. We put a lot of effort into it. But he said that, you know, we're scammers and course sellers. So I showed him this. This is the locked version. But it's my analyst put it together. It took about 40 hours and it's 30 pages, basically just breaking down the entire tariff structure, what the effects are, how it works, and going into serious detail. So I showed him that and I was like, look, how are we scamming people if we're putting this much effort in? And then he was like, okay, my bad, you're not a scammer, but people don't make money with your service. I was like, oh, for God's sake. It's like, you just can't police some people. There is nothing you can say to them to sort of defend yourself because there's always another thing they can do or another thing they can say. So I gave up. Just blocked him and gave up. The better you are, the one you forget because you let the price doing the thing you have to do. Maxi, I'm not sure what that means, I'll be honest. Hey, James, I'll show you a scalping today morning. How do you manage the risk to reward? There is no risk to reward. It's also not scalping. It's more intraday, but it's dollar cost averaging. So there isn't a set risk to reward. It could be, I could place the trade and it could run 100%, or I could place the trade and it could go into drawdown. And I've got to manage it and manage the exposure and the risk per position. But I could end up having 5, 6, 7 positions on. So it's really difficult to actually use a risk reward sort of aspect when you dollar cost average. It's more a case of just the monetary. So if I, the whole position, including the scale in, scales out, could have maxed out at $500 peak drawdown. So, if I need to make at least $500 back when the trade starts running in the direction. So yeah, I kind of do the opposite of swing trading in terms of like how you manage it. I don't know the probability of gold filling gaps. I only did it for euro dollar. Oh, the best trade is the one you didn't stay and micromanage. Yeah, I do agree, actually. I think if you can just let the market do what it does, and you've got solid reason for taking the trade, whether it be the fundamentals or whatever the reason is, and you've got that knowledge that the reason you took the trade generally does work out, then yeah, the least you do of it is better. It's like trailing stops, actually. I don't really agree with that in terms of moving stops to break even. If you have a trailing stop strategy like Nick does, where he will move it, below the previous low or the previous high, depending on the market individually, fine. But when you see day traders, they'll have a 1 to 2, and then they'll move stops to break even as soon as they can. That really messes up the back testing results or like historical results on the strategy, because it's more of a discretional thing. Generally speaking, of course, you can have rule sets for it, but yeah, I don't really agree with moving stops that much. Unless it's a core part of the strategy. You're not doing well if they don't hate. That's very true. Getting the attention, I guess. Yeah, Max, I agree. I think the difference is the emotional aspect. If you have a market like this, let's just take this for a hypothetical. Let's say you enter here and you have this drop here and move stop loss there after you've popped up and created sort of a new high. Fine, that's a structured way of managing the trade. But if you entered here and you move stops here, then it's right here and then you stopped out. It's like, well, why would you do that? You gave the market no room to breathe. That's just a fear of losing money. That's just my view. Again, there are ways to do it strategically and based on stats, but generally speaking, I'd say a lot of people just do it out of fear. What about ATR? I don't use ATR. I never have. No, actually, I've never used ATR for a stop loss. I think it's fine though. We've got a trader at Elite Traders that uses it. I'm long euro dollar at 1 point. Let's have a look. Okay, so you are, what do you say, 1.0916. Wait, hold on, did I type that in wrong? Oh, right, okay, you'll need 1.10916. Your TP is at 1.118. Okay. I would say so. I don't see a reason why your TP wouldn't get hit here. I think that's quite I assume your stop loss is more around there. Yeah, I think that's fine. It looks like we might be getting a correction of this this impulsive candle, so makes sense. I have adapted over the time to never exit fully myself. I've been surprised how often the trade can continue after the target. So I take partials, re-entry. Yeah, well, like they said, there's a million ways to make $1 million in trading. So, for example, when I'm swing trading, I actually normally take a 1-to-1 or a 1-to-2. I'm not looking for big runners. But that's just personal preference. But then you get other people like Nick, where he will trail stops and just milk the market for as much as he can get. Both work, but it's more about preference, I guess. Okay, so Euro Pound I think also has a lot of potential to the downside. I'd like to enter short here. I've said quite often in the past, so it's a very difficult market to trade, or it's a very difficult market to rely on technical analysis, because a lot of the time this market is very, I don't even know what the word is. It's just difficult to gauge, because there'll be times where, like here, where it looks perfect, where it has this really nice double top basically, and then just drops. But then there'll be other times where it just has no technical meaning at all. So like here, it double topped quite nicely, but it didn't really reach a level where I would have entered. So anyway, it's all pretty discretional anyway. But I think we could see the Euro Pound come lower now. I mean, it's a very, very mean reverting market. So I think it would be quite reasonable to expect it to come down to these previous lows, at least into around 0.825. So we've got dovish ECB expected to cut rates again. The Bank of England, I view it as a neutral to hawkish, neutral to hawkish tone. So I think that slight divergence could provide us some steam to come lower now, especially we're seeing an outflow of the euro back into the dollar. I personally trade a mix of ICT, SMC combined with order flow and volume. It has given me a 70% win rate from over 124 trades this year. Very nice, Samuel. Whatever works, works. It's rare to find something that does work with a 70% win rate, so congrats. James, never focus on these negative people. You can only scam a scammer. Most people were scammed because they wanted to find shortcuts. Yeah, I think that's I guess a reasonable way to also look at it. Although I don't think anyone really deserves to be scammed, but well, I mean, there are some exceptions out there, of course, but I think generally speaking, not a great thing to do. I love this euro dollar trade. I'm just so upset. I'm not in the trade, but what can you do? Okay. Oh, another thing is leveraged funds continue to buy the dollar and sell euros. So I think we've also, it's not just the central bank divergence. We've also got smart money positioning that is very, very constructive of the idea. Well, CPI number. CPI came out at 2.3, down from 2.4. So it lost or missed consensus or forecast by 0.1. Wasn't a huge deal. I don't think it's going to be a big thing for the long term or for the Fed decision. But yeah, it seems like the markets are pricing that in at the minute. Okay, cool. Charvon, I already marked up your trade. I already had a look. I think your TP has a good chance of getting hit, yes. I also think we could potentially come and fill this gap and then head lower, yeah. So taking a short-term long position here does make sense to me. I'm actually short in this move. I'm fading this in a DCA. But yeah, I do think, short-term long makes sense. Bro, gold went down. That's crazy. Did it go down? Yeah, it's gone down, hasn't it? Yeah, gold's bound to go down in my view. I don't see any supportive factor right now. So I would be looking for 3,000 again to get hit. So I'm looking for the next pullback, whether it be to fill this gap, whether it to be retest this level or this trend line, whatever. Then yeah, looking for 3,000 to get hit again. JP Morgan, I think it's either JP Morgan or Goldman Sachs. It's one of the two. I can't remember which one. Or it might even be Morgan Stanley. I can't remember. It's one of those ones. One of the Golds or the Morgans. They've still got their target at, I think it was between 4,000 and 4,700 by the end of the year. But I'm going to be honest, unless we get any new flare-ups with geopolitical things, I just don't really see that coming. The Fed will eventually cut rates again, I would expect, but that's not enough in my view to really, especially if gold comes back down to sort of 3,250. Yeah, I don't think that's going to be enough to drive it back up to 4,000 plus or 3,500 plus at least. I'm long dollar yen on a potential pullback. Yeah, I do agree. I think we could see dollar yen head much higher. So I'd quite like to get long as well on the next pullback. So I've got this marked up at the minute. Looking for this 50% retracement, then yeah, look to go long. Does hedge fund have target price for FX pair? Yes, they do. If you tell me which one, I can have a look for you. I can't show it on the screen, unfortunately, but I can tell you what I see. So dollar yen. Oh, actually, hold on. That's for quarters. Let me have a look at the end of the year. Oh, actually. Yeah, I can't do end of the year, I don't think. Can I? Hold on, let me just double check. Okay, so you want it for euro dollar. Okay, no problem. Okay, yeah, for 27th December. So the highest target, in fact, the only targets we've got right now. So the highest target for euro dollar by the end of the year is from Goldman Sachs MUFG, and that's at 1.12. But that really is the high. That's the only targets I've got for the end of the year. It's quite a long forecast. So if we do just quarter, let me also just pull this up. So this would be June. So the highest target is by HSBC and TD, which is a 1.9. Oh, sorry, that's pound CAD. I was going to say that's a really high price for euro dollar. Sorry, guys. I know you can't really see anything here, so it might be a bit boring, but I'm trying to give you some source. Just give me a second. Right, okay. So the highest price in euro dollar right now is by Bank of America at 1.15, which has already been breached and failed to hold above. We've got RBC at 1.14. We've got ANZ, Goldman Sachs, and Goldman Sachs at 1.12, which has actually just been broken. Let me just see. And then we've got Citibank down at 1.03. Minimum, or the lowest target for this quarter, is by HSBC, and that's at 1.01. So there you go. Again, I'm sorry, I can't put it on the screen, but hopefully you wrote that down somewhere. Got stopped out of dollar yen yesterday. Were you long or short? Also about market gaps. Abdul, we've discussed the market gaps as well. I'm not going to be really taking any trades until we get corrections back into these gaps. I feel very uncomfortable taking trades when we've got these gaps that are still open. In currency markets, gaps normally get filled pretty quickly. When I say quickly, it could be a day, could be a couple of days, could be a week, could even be a month. But yeah, I don't like trading away from gaps. It's just personal preference. Because this trade actually looks fine where it is, to be honest with you. I don't mind this. But then we could come back down into the previous highs, fill the gap, and continue higher. And then I would have just taken a 1% loss for what reason? No, well, I could have just waited. Euro New Zealand and New Zealand US dollar shorts. I don't like Euro New Zealand shorts, but New Zealand US dollar shorts, I don't mind. I've actually got this marked up. Actually, you know what? This might be an entry potentially. If this H4 candle can close where it is, not close where it is. If this H4 candle can close bearish, I would take this because it's a very sort of clean break and retest, really, and it's a lower high relative to previous high. We created a lower low as well. So yeah, I don't mind that. My original entry was looking for this 50% pullback from high to this low, which obviously has changed now to slightly lower down here. See, I might revise this, something like this. Here we go. We can get rid of this since that's... Yeah, I like it. I might go in for this one. But again, I'm just going to wait for this H4 candle close, and that might be a trade. New Zealand yen looks perfect for a bull setup. Does it? I don't see anything here. It just looks a little bit too high. And again, we've got this market gap that I can't really trade away from. So if we could come down, fill the gap, then yes, maybe I would be interested. But right now, can't justify going in here. Can I ask why you don't like your New Zealand short? Because the New Zealand dollar is very weak at the moment. Let me just post something up for you. Ah, that's not what I wanted. Hold on. Currencies, New Zealand dollar. Yeah, here. So I put this out every week. If you want access to this, it's completely free, but I'll put it in our free Telegram every Sunday. So you see NZD macro. I'm not going to read all of it. I'll just read the summary. New Zealand's macro backdrop is deteriorating, growth is flattening, inflation remains too high for easing, and external demand is weak. The RBNZ's hawkish hold provides marginal support, but without growth or commodity strength to back it, the policy stance is insufficient to drive New Zealand dollar appreciation, barring a surprise rebound in China or global dairy prices. NZD's likely to underperform in the near term. So that's why I'm not that interested. I mean, the yen, yes, I would expect the yen to also lose value, but why would I waste leverage? Why would I waste margin? Why would I waste time trading two weak currencies when I could just go and trade, a strong versus weak? Just doesn't make sense to me to really pay much attention to this market. It might move up, sure, but I wouldn't have conviction in the trade. I wouldn't be very happy in it. I would be checking it. It might make me a bit uncomfortable. So I'd rather just save my margin and my mental capacity for a better trade, or a trade I view is better. And as for the euro, I've already said I'm not really a fan of the euro. I think it's been bolstered by dollar outflows rather than necessarily strong fundamentals. We've got a weak we've got a dovish ECB as well. So the trade doesn't have much going for it. Oh, sorry, this was New Zealand yen, but yeah, anyway. Gold, we've discussed gold a few times. I'll do it very quickly, just so you've got an idea, just for anyone else. Gold, I am bearish. Short term, I don't like to be a bear on gold, but I just don't see any reason to buy it. And I think it's very expensive. So it wouldn't be a surprise if we see some profit taking and some slight repositioning going forwards. So I would look for a gap fill here, or some sort of higher price here up into the previous levels, or trend line, then taking it down to around 3,000, maybe then down to 2,500 if there is still not really any bullish factors. So that's the idea on gold. Aussie New Zealand is better mean reverting than Euro Pound, yes. It's actually one of the best markets to dollar cost average. The only problem is the spreads, and the spreads increase massively during market close, market open. So it can be very tricky if you're holding positions. It can be quite intensive. But yeah, if we just look on this weekly time frame, it doesn't do anything. I mean, yeah, sure, we've got movements back here from 08, but obviously 08 was a very unique time. If you don't know, you should get to know the GFC. But yeah, generally speaking, this market is sideways. There's nothing to do here other than quite literally buy support, sell resistance. It's pretty textbook. Royal Trades, hello. Substination, hello. Good to see you guys. New Zealand yen looks good for bull sets on longer time frame. Okay, let's have a look on the longer time frame. I suppose monthly, Yes, the monthly looks pretty strong here. Really strong wick rejection to the downside of this support level. But yeah, I don't know. It's just not enough for me right now. We've also got this daily resistance, I suppose you could look at here. It looks like we're probably going to break it, but I also wouldn't really be too keen buying into that just yet. So yeah, there you go. Just gonna have a quick look on euro dollar, see if we've come down at all. As I said, I'm in some shorts on euro dollar. I've been shorting this little move here, just some small DCA positions. Doesn't seem like I've really got anything going just yet, though. Actually, let me just see. Oh yeah, I can show you the positions here actually. So this is, you know what? I've just realized I don't really think I've said anything. So my streams on my personal channel recently have just been live streaming passing a prop firm. So this is quite a good representation or a good way to display the DCA, because what I did was I bought a 50K account basically just to see, can I, or is there going to be any problems? Are they going to ban me for martingale? Are they going to ban me for grid trading? You know, prop firms can be a bit dodgy, especially with aggressive strategy, I guess you'd say, like DCA. But so far, it's working out very well. So I've got a almost 92% win rate. So yeah, metrics look fine. I mean, I've been doing this account for a while. I think it's been 15 days, has it? Yeah, 15 days trading on this account, and we're up. Was it about 5.5%, which I wouldn't say is too bad. So yeah, these are the positions. This is what I was trying to say, was these are the positions on euro dollar that you can see. So yeah, pretty straightforward. So there you go. That's for you. What's the trading view for the Swiss index? These are the tickers here. So yeah, there you go. They're all the tickers. So you've got the dollar, you've got the Swiss, you've got New Zealand dollar, yen, euro, Canadian dollar, the pound, and the Aussie dollar there. I'm interested in dollar Swiss. Yes, I do like dollar Swiss. I like to go, oh, sorry, I would like to go long on dollar Swiss, but again, it's just a little bit too extended right now. I'd need to see it again. I'm sorry for anyone who's been watching for a while. All I've really said is I need to wait for pullback into this gap, but I need to wait for a pullback into this gap. But yeah, a lot of the markets are looking quite similar now. I've got the directions pretty much on point, actually, but no entries just yet. There's a huge support area to break 1.88 on what? Hold on, let me just see. Oh, and Euro New Zealand. I'll have a look at the chart, but yeah, I just don't see any reason to be in that market, to be honest. Oh wait, hold on. What was it? Buy? Is that what you guys are doing? You buying or selling? I'm curious. You see a great sell. Yeah, I suppose from a technical view, and again, I don't like the fundamentals, but yeah, I see the argument for waiting for a break of this support level. I'll get rid of that. And then looking for a correction of this left side. I don't mind it, but again, I just don't have any conviction on a macro side, so I can't justify taking the trade. But yeah, I get it, I guess. Yeah, you guys are shorting, yeah. Okay, it makes sense. But again, that would be, in my view, more of a mean reversion trade than a macro trade, which is fine. I trade mean reversion, but not on that market. I don't think I've got anything open. Oh, we've got a trade on the FR40, which is the French index. We've got a long position on this one. Let me just change that. There we go. That wasn't my trade, though, so I can't really run you through that. Euro Australian's a pending order, so I'm not going to pull that up on stream. You got to pay me for that kind of info. View on pound dollar, I would also suggest a short. Well, sorry, I can't suggest a short. That's not within my regulatory threshold, but I would say probably going down. I think pound dollar, euro dollar, Aussie dollar, New Zealand dollar, blah, blah, blah. So on dollar crosses to the downside. The dollar's been heavily sold off for multi-weeks. We've got smart money that's been buying the dip. We've got a hawkish to neutral Fed. We've got a pause on rates. So it seems primed, really. We've also had, I think we had inflation come down in the UK as well, didn't we? Which is supportive of that, of the rate cuts by the BOE. Oh, you saw the Euro Aussie entry? Yeah, it does look okay, but again, it's not my trade. So I'm not going to speak on that one too much just yet. On gold, this is a pretty key area. I think bull will try to defend. Potentially, yeah. I think we could see the bull step in here on gold. Yeah, I really don't have any justification for buying gold, though. The only thing I can think of is it's moved higher. You know, it's in an uptrend, but that's it. Geopolitics have settled down. Trades are cooling off a little. Oh, sorry, tariff concerns are cooling off a little bit. Fed's paused. There's just not really anything there. What do you think about pound New Zealand? Yeah, I think pound New Zealand could also be okay. It's not something that's on my watch list particularly. I've got no interest. But oh wow, that's a shame. Could have taken that one. But that's what I mean. That's exactly. Do you remember earlier when I was saying there's trades on markup and forget about because I'm trying to run through everything? That's a great example. But yeah, I think pound New Zealand could continue higher. As I said, I think New Zealand dollar's in for a rough time. I don't think it's really got much going on in terms of upside potential. The pound. Let me just double check actually what the Bank of England is currently doing. I just need to quickly refresh my memory. Okay, so they were actually dovish to neutral, so I was wrong earlier. I must have misspoke. Bank of England cut rates 4.25 disinflation, and the RBNZ dovish. Yeah, so there's not really any divergence there between central banks, but I think generally the pound is a little bit better off than New Zealand dollar, but nothing overwhelming that attracts me on that one. ACO, hello, or ACO. Thoughts on the Aussie US dollar? Same thing. I would be looking to go short, my personal view. I think the dollar shorts are a little bit exhausted now. I think we could, obviously we had CPI come out a little bit flat today, a little bit lower today. But yeah, generally speaking, I'd be quite happy to go short on these dollar crosses. Russian-Ukraine due to meet in Turkey. Yeah, I also heard that. I'm not sure when it is, though. Oh, Max, you added into your long-term Swiss yen. Very nice. Don't blame me, though, if it goes wrong. Although if it goes right, yeah, you can thank me later. But it's going to be, I would say it's going to be quite hard for paper hands to hold. I think it's, from a view on the data, it looks like this market could continue higher. And it wouldn't be a huge shock to me if we actually do come up and correct this candle here from the intervention or from the rate hike back in July. But we'll see. If you are DCAing and you're using proper position sizing and risk management, it should be no problem. I would be a little bit concerned, however, if we start breaking above all-time highs. I might then be like, maybe time to cut the position and start rethinking the idea. How long it takes to pass prop firm? I got no idea. Last time it took me about 4 hours to pass phase 1 and 2 because it was a macro trade. I just went full margin on it. It was essentially just high volume, just enter into that same direction. So that was, I'm not luck, but it wasn't a typical trade or typical way of trading. At the moment, I'm over halfway through, so I've got to make 8%, and I'm 5.5% up. And so far, it's 15 days into the phase 1. So We'll see. But I am using pretty conservative positioning, so I probably could do it quicker, but that would also involve more risk. So how many hours do you spend on a day? 12 to 14 hours a day. But that's because I work from this desk. I run 2 businesses. I trade. I'm starting up a new business all from the same desk. So I always have the charts open regardless. So yeah. But I'll be honest, actually, being on the charts more actually really hurt my profitability when I first started being on the charts a lot more. I found myself making more emotional decisions. It took a lot of time really to get over that. What happens if you blow a prop account and I'll buy a new one, or I'll just focus on personal? The only reason I'm doing this prop thing is because I think if it works, if I don't get any ridiculous rule breaches or I don't come across anything stupid, there is no reason that I can't do this on Funded Next and E8 because they allow DCA trading. So I can use those 2 prop firms, buy 3 or 4 200K accounts on each, and just DCA. Why wouldn't I? That's just what 4, 6, 800K in allocation for just DCA. And then what I could do is actually just use those accounts for DCA with higher risk, and then just slow down on personal accounts and just use those for sort of the swing trading or long-term trades. I don't know. I will see. I'm not there yet, so I'll have to plan that when we get there. But that's sort of the rough idea at the moment. Does it mean that during challenge account being aggressive is much better? No, not really. It depends on your personal situation. If you can afford to blow the account, so let's say you see let's say New York Open, there's a huge candle. It's really got a lot of momentum, and you've got time to get into that candle. Then sure, go for it. But it's more a case of if the account doesn't work or if that trade doesn't work and you went full risk, can you afford to buy a new one? And is that going to damage you in any way? It's the same with, basically the same with everything. Can you afford to take the risk? No, there's no consequences, OT. If you blow a prop account, you don't get the money back. You obviously lose access to the account. So let's say you buy an account for $1,000 and you blow it, you lose $1,000, but that's it. As I said earlier, there is no set risk because it's DCA. There isn't like a set percent risk really. It's more just what I allocate throughout the position. So I will allow each trade. So let's say, let me just visualize it for you. So let's say I've got these 3 trades open. This one just reached 0.5% drawdown. I'll cut that and then I'll re-add in at a higher price. This one then might reach 0.5, so I'll add in here. And then eventually we'll get that reversion. I'll take profits here, wipe out these 2 losses, and these 3 trades will be winners. So obviously that's simplifying it massively, but that's the general idea behind it. So in terms of lot sizes though, my go-to for low risk or medium to low risk is 0.01 lot size per 1,000 in the account. So if you've got 10,000, I would use a 0.1. If you've got 20,000, I'd use a 0.2. If you've got $1,000, 0.01. But again, that's just what I find comfortable. And that's what I can manage well without being over risked or anything like that. What was the aha moment? I didn't really have an aha moment. I think that's a little bit of a trap or a trick. I think that's like, use this indicator, you'll have your aha moment, or this SNR strategy is your aha moment. So that doesn't really exist. You'll have periods where it's like, oh, that makes sense. But you're not going to have a moment where you're like, oh, I've been drawing that. I've been using the fib wrong. Now I'm profitable. It doesn't work like that, really. It's a process. There's so many different moving parts in trading. You've got fundamentals, then you've got the whole rabbit hole of fundamentals, then you've got geopolitical situations, you've got the charts, you've got indicators, you've got tools, you've got so many different things, risk management. I don't think there is just one thing. It's like, oh, wow, I'm profitable. I think it's like, oh, well, that makes sense. So now maybe that would do this, and then I can do that. And then eventually you're like, okay, I kind of actually get it. This stuff kind of makes sense now. But that's after like a 6-month, 1 year learning process. Yeah, it's DCA. I don't martingale. I back tested doing the same strategy but increasing lot sizes. So every position started 0.01, then went to 0.02, then 0.04, then 0.08, then so on and so on, doubled every time. I made, and again, this was a back test, this wasn't a real account. I made on a $10,000 account, I brought it up to about $500,000 and then blew all of it within about like the next couple of positions because I was just doubling every time. And that's the thing. It's actually another thing with a lot of retail trading EAs and algos. The majority that actually make money use martingale because it's such a profitable way to trade. It's like guaranteed profits, but it's also a guaranteed blown account. Like 100 times out of 100, martingale will blow your account, but it's more just a case of like how long until that does blow. So, if you are if you are a little gambler, maybe that's the way for you. But for real trading, martingale is never acceptable in my view. Well, unless you've got like a really, really solid risk plan. But I don't really know how you can have a solid risk plan and martingale at the same time. It's kind of like a catch-22 or counter-intuitive, whatever. Indices pumping like crazy, are they? I hope so. I'm looking to cash out my S&P investments quite soon. So I'm invested in this, it's the S&P, but essentially it's just priced in pounds. So I'm looking to cash out this because I've got another investment I want to go in on, but I can't just yet. So I've been buying this market since around here. So I bought this whole dip, and I'm in profit, but I'm not in profit enough. I'm a bit greedy, I'll be honest. But yeah, this US Open has been pretty nice actually, especially for the S&P. The NAS has moved well also. Yeah, NAS and the S&P have done very well off that. In fact, the S&P is pretty close back to all-time highs now, really, isn't it? It's closer to all-time highs than not, if that makes sense. Yes, it's like a puzzle, as Aminio said. I would agree with that. Do I always trade? No, I use the 30-minute day-to-day. A personal question, Central Bank of James. Did you have a mentor? Yes, kind of. Not a conventional mentor. Alan, good to see you, Alan. Not a conventional mentor. So I didn't have, it wasn't a case of I was sat on Instagram and I got a mentor and paid him $5,000. I had a family friend that used to work in Canary Wharf, which is a financial district of London or financial district of the UK. So it wasn't like a sit down, I'll teach you type of thing. It was more, he would send me stuff and he'd be like, what does this do? Or what does this mean? Or how would you do that? In terms of fundamentals, it wasn't a trading mentor, it's economics. I was like, I don't know, got no idea. So he'd be like, well, go and figure it out. Then I'd come back to him like, okay, well, this is what I think he means. He'd be like, no, you're stupid. Or he'd be like, yeah, okay, you're getting there. But it was only surface level stuff. It wasn't like, delta, gamma, and figuring out the really detailed stuff. It was more just general news headlines and central bank stuff. I want to ask for an advice, like your idea, general idea. So I'm sticking to my plan and I see a lot happening from a strategy to another. Oh, sorry. I see a lot hopping from strategy to another. I know this is wrong. I know it, like my setups goes into profit. I don't know what that actually means. I guess you're trying to say that you're strategy hopping, but I'm not sure what you mean by your setups goes into profit. Are you saying that you're strategy hopping, but it's working? Is that what you're trying to say? I've got to say, you can't not be greedy in a trader. It's that being a trader inherently makes you greedy because you're trying to get as much as you can from the market. But who was it? Oh, as Royal Trade said, you need to know where to draw the line. Greedy is fine. You've got to be greedy in life, but that I'd say being greedy and letting greed control you obviously are very different things. So if the market's not doing something, but you're trying to get it to work, that's being greedy. Whereas greed is just, okay, the trade's running, I'm going to let it go, trail stops. and I'm going to get as much money as I can from this trade, as you should. That's what every trader should do, is try and make as much as they can from their ideas. That's the whole point of it. But yeah, letting greed make the decisions for you is obviously a terrible idea. Can you buy a $20 to $50 prop account? Are you asking me to do it, or are you asking hypothetically, can someone do it? Because I'm not going to do it. It's a waste of time, I'll be honest with you. I've got other things to be doing than trading $20, $50 prop accounts. Anyway, sorry guys, I've just realized that Chris is here. I've run over by a minute or so. Guys, have a good one. Don't leave when I leave, because we've got Chris Pulver coming to take over. You'll be in great hands with him. Thank you all for watching. Stay safe. Don't get margin called, and we will speak tomorrow.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. Happy Tuesday. Welcome back. Just taking a look at the CPI data this morning. All came out at 8:30 a.m. Eastern time. Just the summary here. Core CPI came in a little bit better than forecast, slightly higher than previous. Core CPI all remain the same as previous, same as forecast, 2.8%. That's core CPI. Year-over-year CPI, which is what I was watching. Previous was 2.4. Forecast of 2.4 came in 2.3. Kind of same thing. I mean, what is tended to be the lagging inflation data has been shelter. That's been coming down. We obviously broke a floor on oil around $62. So with oil less than 62, shelter coming down, all the lagging data kind of catching up to current. Like the trend has been lower. We've been spot checking the Trueflation, which is third party, and inflation index on this is showing lower levels. So let's go max. Nope. 3-year. Nope. 6 month. So just since December, I mean, pretty big improvement. Inflation index is up around 3%, dropped quite a bit. We have seen, several prints now in a row to the downside. If you go to your Edge Finder, look at your CPI prints, we should continue to see some trends in the right direction. So here's your inflation data, looking at year over year. So histogram is, I mean, it was sticky since summer of 2023, but I'll just draw a straight line over. So a straight line over this way. Outside of that little elevation into November, December, we have been trending 1, 2, 3, 4. 4 prints lower. So that is a good thing. Is it still, close to that 2% inflation target? No. The bond market is not pricing in lower inflation. If it was, we wouldn't see 10-year yields rallying, which they are higher today. We look at the 2-year yields, flat, but still on the last 3 days of trading, 2-year yields are up, 10-year yields are up. That's 1, 2, 3, 4 days with higher highs. 20-year yield. This will be something to watch here in the next couple of days, simply because this is where we had the Liberation Day kind of bond market breaking, or flinching rather. And so when we saw the basis trade blow up from, this went from 4.4 to over 5% in 2 trading days? Yeah, so 3 trading days, 1, 2, 3. In 3 days, we saw a jump of 60 basis points or more. I wonder if we start to see something else happening here around that 5% level. I mean, it doesn't have to be, but this is the biggest pressure point for the current administration and the Fed is how on earth are we going to service debt at higher yields? How are consumers going to feel anything as far as improvements go? Look, the Fed can cut rates in 2025, and you and I as consumers will never feel the benefit of that. That's kind of what last year felt like, right? Rates were lowered by 100 basis points and yields went up by 100 basis points. You want to buy a car? It's actually more expensive. You want to buy a house? It's actually more expensive because prices have gone up and yields and borrowing have gone up. So the cost to borrow is higher. I know this may not be like a major concern right now, like today, but I I have to imagine in the next 12 months, like this has to be a pain point in the market. This is going to choke out growth if you can't refinance debt, because the reality is, the world doesn't pay back debt; it refinances debt, right? You keep the cash flowing in, you keep the runway going, and I just wonder, the Fed might lower rates and be able to lower the service of their debt, but that's the Fed, not everybody else. Consumers have to borrow based on what the yields are giving us, and the yields are not going down. So anyway, markets are up today. We didn't really have, aggressive price action like we did yesterday. We just had a huge gap yesterday. Prices were actually quite quiet. This was yesterday's trading day, so we had a huge gap up, and then price action was relatively calm. We're getting more of a directional push today, but I'm watching. I've got some 5,900 levels. I just turned a little butterfly spread and some profit this morning. So hitting, if we hit 5,900, I hope that we actually have a little rejection off of 59. I want to see if my SPX trades can get back below 50 at 80 and come back into this range. This would be hopefully a nice little win on SPX today. So I'll ride that out a little bit longer. Yeah, we'll see. So I'm going to watch that closely. Let's go back. Actually, go back here to SPX. Let's go currency strength chart on the day. So we've got Aussie on top, New Zealand on top. We've got dollar CAD weakest, Swiss euro, pound, Japanese yen stuck in the middle. Not a ton of volatility in the currency market today, but Aussie, New Zealand coming out with some risk appetite. China wasn't up though. If I go HSI, I saw that China was down slightly. So China down slightly on the day. So HSI, this one, yeah. So here's just my China basket. So 23,108, China's down about 1.87%. CQQQ is a little bit lower. Alibaba is a little bit lower from yesterday's candle. Baidu is kind of back up again. All right, so we're at 91.25. I have some covered calls this week. Let me check on Baidu really quickly. Baidu is in here somewhere. Yep. So Baidu, yep, 95. I got to modify this one as well. So Baidu. Covered calls expiring this week at 95, which means I'm probably going to see some profit on those just on the income side. I don't think I'm going to get them called away at 95. If I do get them called away at 95, that's okay. But I kind of want to ride this stock out a little bit longer. I think if we're going to see, US and China play nice, I think Alibaba and Baidu both have some good upside potential. This one, strong support. I would like to ride this one kind of uncovered. I mean, just because I think it can appreciate quickly. So if we go from, in the 90s into like 100 plus, I'd be interested if we get to like 108, 112, 115, then I start adding some covered calls. As opposed to if I start adding covered calls right now, it's nice if it just goes sideways and that's great. But if we start to get price appreciation, I'm going to cap my upside. So I think this is a stock that has potential to run. And, this is just like kind of phase one of my technical outlook on Baidu. If we have support, this is actually where I want to say I'm going to dump the shares. That's a big move, right? So, I mean, I own shares in the low 80s. I'd love to, double that entire chunk if we get to 150, 160. So good upside potential. It's going to take some time, but valuations, I mean, if they're real, valuations look pretty nice because they're cheap, right? Kind of the same thing here. Alibaba had a much bigger run. This took kind of the AI buzzword and ran with it, and we saw like a 60 to 70, I think 80% rip. That was up around 85% in like a month. So they can move quickly, say the least. Okay, but I'm watching both of those. JD, we had earnings on, or we have earnings this. I think it was this morning. Yep. So earnings this morning, beat on revenue, miss on EPS, but JD is up and I've got this one covered at 40. I will also, I don't know if this is my covered call. I think it is. Covered at 40. Yep. So I've got a list here of covered calls I need to monitor this week. So IBIT for Bitcoin, Snapchat, Pfizer, Silver, Baidu, JD, all those covered calls are expiring on the 16th. So I'm either going to be adding more covered calls to continue to generate the income or let some of those run uncovered and see if I can get the price appreciation. Okay, let's do some more top down. Well, your guess is as good as mine when this thing's going to stop going up. So, I mean, yesterday was a pretty big push to the upside, mostly led by a 3 a.m. announcement. That was the big, like, 1-minute candle. I don't even know if that was tradable in the moment. But that was pretty much what set the posture for the entire day. Here we are continuing just a little bit higher. Let's see. I mean, I still think you zoom in between the futures market. You can take this to, ES, go down to a smaller time frame. You don't see this happen very often in the futures market, and I don't think we can ignore that we have a gap right there that's likely going to be tested or filled, an inefficiency here. This area, the second box, let me make this a little bit thicker. So this box right here, I would say, is a very realistic pullback zone simply because that was the previous low. So that first sell-off we had with the Mag 7 rotation when we first got to the 200 moving average and lower, that would have been the, like March pullback low. So we bottomed out here, February, March, pulled back for 2 weeks, and then flushed lower, Liberation Day, all the drama that unfolded there. So point is, this level where I've got the left structure over here, I could see the market finding that kind of symmetry. So it doesn't mean I want to get short. I'm just saying as a I want to buy a dip. I'm hoping we have a dip. A dip to me would be a pullback into that zone, right? So if I'm going to get short this market, it would probably be short-term trading. It might be, daily to weekly. It might be a futures trade. If you're waiting for a trend line break, even like this structure, until we break that trend line, I wouldn't be forcing shorts on this market, or maybe that connect to lows. So until we go sideways enough, or until we roll over, that would be kind of that short-term correction I'd be watching. Make sense? But what I see here, it just stands out. In the futures market, we don't get a lot of gaps, okay? But that's a noticeable gap. That's a big liquidity pocket. This is a noticeable gap. And we have lows right here. Obviously, big lows right there. Are we coming all the way back to April lows? Probably not. Probably not. But I think a dipper pullback into, I mean, I like 5,600 a lot. I like 5,600 to 5,300 area. Doesn't have to be perfect, but that to me would be a chance to buy the dip, define risk. If this is the chance for the buyers to step back in, this area I'd like to buy, and then see if we are going to make a run to all-time highs. So I would be happier buying the dip there as opposed to watching this thing melt up, and here we are having this conversation. Well, I guess we're at all-time highs with no pullback, right? Because you look at this and you're like, well, I guess if I didn't buy it here, what do I do? Buy the high, 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 buy the high. I mean, that's fine, but it's not how I trade. So I hope we have a bit of a pullback. Right? Futures market has some levels. There's big gaps in the SPX and SPY, obviously. Take a look at NASDAQ futures right here. Similar, right? So, kind of minimum gap, little liquidity pocket. That area, here's your left structure from March. So between about 19.6 and maybe 19,000 if we get a pullback. But tech is running pretty hot. In fact, this comeback, let's go bottom. I mean, we were down 28% in the NASDAQ, and this comeback is up around 29%. Obviously, we're not to all-time highs, right? So we had 28% peak to trough from high to low. So about a 26% correction. So 26% correction. Was that the, I guess that, yeah, okay. We go sexually higher. The highs in NASDAQ was December 2024. So that's where I get my 28%. So from this high to that low, there's your 27, 26.5% correction. Okay. And then we rallied up 29%. We're still not at all-time highs yet. But as far as the rally goes, this low to high, come on. Is my ruler broken? That rallies up 29%. We go back to S&P futures, and that low to high up about 22.5%. So NASDAQ tech a little bit more volatile to the downside, but also more reflexive and moving a little bit faster on the recovery. The Dow is weighed down again today by UNH. I can't believe the stock just can't find a freaking bottom. It's dropped another like 10% today. Down 15% from yesterday's close. That's insane. Outlook down nearly 14%, lowest close since February 2021. I mean, is there a reason why? On pace for the largest decrease since April 2025 when it fell 22. Okay, down 8 of the last 9 days. Look at this thing. Down, 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 down. Month to date, year to date, down 48% from its closing highs. Down, down, down. Yeah, we get it. I'm looking for a reason why. I don't see it. So anyway, I do have some exposure on this. I have a ratio spread. I did a I did a longer dated ratio spread. I'm thinking that the market doesn't just drop straight down, but here's UNH. So obviously I'm down in the position, a 270 by 260. I was saying on these accounts, these are portfolio margin accounts. I was willing to own UNH. I'm not going to close this out. I mean, I could just say like, yeah, I'll just cut it off now. But let me go to January. I mean, on the downside, it's like, I suppose in the lower deltas, this could still continue to drop. I think we're getting the type of volatility in the stock that it's probably never seen before. I mean, you go to a higher time frame, it's like it's highly unusual that this stock has behaved like this. I mean, this looks like a typical like progressive, insurance company, healthcare. Like there hasn't been that much volatility, but we did break the floor around 441. I don't know if this is just a monster pushback down into previous resistance, which is why I positioned my ratio spread there. So this previous resistance, does it offer a bit of a bounce? I mean, I would hope there's a bounce and a gap fill there. So that's kind of what I'm trading is, I mean, I've got the capital to own it. With the IV this high, the implied volatility this high, I mean, I could repair it. If they get me assigned early, that actually makes my job even easier because I can just come right in and lower the cost basis. So we'll see. So I did a 270 by 260, which is quite a bit out of the way still. So even at 323, if we have to get down to 260, this stock still needs to drop another 19%. Not saying that it can't happen, but that would be a drop of about 58% from the all-time highs. And even if I get the assignment, my assignment would still be lower. So I take off $10, and then the credit that I pulled in on the trade was, I think, a decent amount. I pulled in $6 and change. So as far as owning, I get assigned at 260. If that's the case, minus 10 in the ratio spread, minus 615 on the credit, I'd own shares of this at 243. So if I was assigned, I'd own shares at 243. That'd be about a 61% discount on what should be a fairly stable stock. But that's the problem right now, is I think it's a little unstable. So anyway, that's that. Let's keep going. Let's do dollar index, which I saw was down a little bit today. The volatility index is down, one of the bigger crushes we've seen in a long time. So we're making some lower lows on volatility. I'd mentioned this, a good purchase anytime the VIX spikes is SPXY. This is up 27%. So I mean, you had to have the courage to buy this thing during April, which obviously wasn't easy. But this is up about 27%. So not a bad way to play contracting reverting VIX. So that I did buy the shares in here around $35. I closed them out about 38. I took a small profit there. Obviously, if I hung on a little bit longer, I didn't think we would just keep smashing lower. I mean, if you look at the VIX, when we settled into, I mean, this level here from like 60 down to 28, I was like, well, maybe this kind of runs out around 20 and then elevates again. But we've had no real flare up in volatility these last maybe 2-3 weeks, right? So long story short, SVXY was a good trade to play the VIX. If VIX is tough. I don't love this trade. I mean, I've traded VIX long. We've had some runs and had some good profit there, but on this example, it's more difficult to short it. You get paid like a fraction of what you want, so I tend to turn to SVXY when I like it. So until we get another VIX event, I'm out of it, but that's just something to watch. Bond volatility is increasing a little bit. There's your SVXY. Your dollar index is, I still think now that we've had our pullback into the 101 handle, watch this low, keep an eye on this. Like, I'm not ready to short the dollar yet. Two reasons. One is, if we're on the right-hand side of the trend line, let's say that this thing is, I mean, here's the daily time frame. We're pulling back to the 2150 period moving average. Okay, big deal. We have some structure in here that could offer a little bit of resistance. We have some structure here that could offer a little bit of resistance. If I'm going to short the dollar, if you're taking a stab here, like, that's fine, but you also have to be prepared for it. You're not confirming that the trend is resuming, right? Like, this trend is not resuming yet. So if we have a little bit of choppy here, still pulling back, wait for a trend line break. I like that trade. Wait for some shenanigans, retest the highs, area 1, area 2, see if the dollar trend holds. I'm hearing, I'm seeing mixed reviews on whether or not the dollar is truly going to be a bear market, or if this is nothing more than a bigger range. I think if it feels like 1 year that this conversation of the dollar's losing gold reserve status is really happening, this certainly seems to be the year. I mean, gold has been one of the best performing assets. It's outperformed the freaking S&P. Maybe not anymore, but do you remember that slide we talked about not that long ago, maybe like 2 weeks ago? Like, the ETF GLD actually showed that over a 20-year performance, it outperformed SPY. I mean, that might have switched because we've had gold pause and the S&P has rallied a little bit further. But my point is, this is one of the worst starts in 30 years for the dollar index. And I mean, I don't know if the dollar is going to get any love. I mean, as far as like big picture, like, what happens when the dollar gets stronger? We usually see risk off trading. Well, if the world, like right now, the entire world is benefiting from a weaker dollar. It's better for trade, right? Everything that's priced in dollars is cheaper. It helps, import exports. It helps the global economy. That whole dollar milkshake theory, it's like it sucks all the liquidity up when the dollar is strong. So a weaker dollar is helping, right? So I wonder, like, is this the start of what could be a very important shift in dollar pricing? So, and I mean, I don't know, but I'd say, just as a trader, if you're following currencies, I think right now, even if this dollar index were to pull back into this area, I mean, if you want to treat this thing like, death of the dollar, this is truly the end of the dollar, it's not a bad way to play this. If we had a swing up here, let's say that that's my stop loss, and I positioned 1, 2, 3, small trades. Let's say like a whatever, 0.5% risk. Okay, I put a 1.5% risk on the trade for a potential 3 to 5% gain. And on top of that, if we get the confirmation that we want, we can add more risk here of like 0.1%, 0.1%. We can build the risk up as it's going our way. We can turn this into a much bigger winner if we're right. So rather than being super, super, super precise on how this thing plays out right in here, just look at the bigger picture. So I think if we break this trend line, we possibly come back in and revisit the lows. That's probably a pretty safe trade. We go a little bit lower. I still think there's some potential divergence, but I think the dollar is going to struggle around this like 102 handle. We don't really go too much higher than that. That the pressure remains very firm on the dollar. But if we go, above 102, I wouldn't just force a bunch of shorts. So point is, confirmation, I think, is going to be key here. We're talking about trading a major macro theme. If you want to trade currencies, usually you can trade currencies with technicals and be pretty much like unstoppable. Just trade currencies, trade technicals, and fundamentally things just kind of fall in line. But when you see the combination of a fundamental landslide type movement on top of a technical setup, you get some of the biggest and most ridiculous moves in the market. And that's where it's like, man, this Forex market is irrational right now, i.e. Japanese yen in 2022, i.e. Swiss National Bank, 2015. Like stupid stuff has happened in the past. But we've never really seen the market break on the dollar before. We don't have flash crashes on dollars. We haven't, but I do wonder if we're about to see one. So, like I said, if this conversation, it's been around for probably over a decade, death of the dollar, world reserve status, blah, blah, blah. But this probably has the feel of it's more real now than it has been in a while. Obviously, it's going to be virtually impossible just to completely eradicate the dollar. But you can see that the world is trying to move aggressively away from the dollar. The world is trying to move away from dependency on the US right now. And we'll see how long that trend sticks. So anyway, we'll see. I think if we get back down to the lows again, 98 was the low. If you can zoom in here, you can see some resistance. I mean, a 4-hour time frame would also give some good indication. If we get back below this, if we get back below the 200 moving average, that might be an early entry, but entry there, stop loss above. If it breaks this trend line, I think you just hang on to that trade. Be willing to take this out to this trend line though. One thing in currencies, I never really love to put the stop loss right above the U-turn. I like to trade a little bit smaller and then maybe reserve a trade for the same high or a slightly higher high. So 1 and 2, if you want to just wait for the trend line to break, then you wait for the trend line to break. You sell it there, which is actually a crappy entry. And if it pulls back, you're looking for maybe this as a second trade or this resistance here. So, and all I'd be going after if I'm shorting the dollar, I'd go after the same low. And if we poke that low, move your stop loss to break even or better, start trapping profits into this. If we go lower, that's fine. Right? So I think it's something to keep an eye on. If you're a currency trader, dollar certainly moving a lot. And Aussie dollar, I still like the pullback zones. So I mean, like I said, this week it's like I'm not buying that dip. You see, like serious, like that's not even a pullback to me. So I want to see if there's just a bit more pullback in here. There's good left structure over here. So I mean, if I'm buying Aussie dollar, I kind of like this, 63 to 6200 zone. I could put a swing trade below that. So watching this area and then look for a swing. If it goes higher and it just keeps running, I guess I don't get the pullback that I want. Like I don't like to chase currencies when they're so good at pulling back and finding efficiencies. Here is oil. I did get a little scared out of the oil trade that I was in for CL. Granted, I only lost $10 on it, which isn't a big deal, but this trade would have been pretty nice to just hold the profit. It was going to be worth like $150. So I got out, no big deal. But oil at the same low, and this is what I said. I said if we came back down to this level, I'd like to look at a bull put spread, or I'm sorry, a bull call spread. So if I bought a call, sold a call, try to look at some type of like 110, 120% return on risk, that trade will be playing out pretty nicely right now. I don't think oil is necessarily heading, into bullish territory. I think we're still going to be stuck between this, current low around $55 or $56, maybe resistance around the 65 handle. If we do come back up to the 200 moving average, this has been a rejection point for a while. So resistance, that was a fake out, resistance again. So we come back up to this, 65, 50 resistance and hit the 200 moving average again, maybe, right? It just becomes more noise. So it can be tough to trade unless you're really precise, or you're basically just taking both sides of the trade. If you're, selling above, selling below, and it stays in the middle, you can make money on that trade. So just keep an eye on it. But this is resistance now, and this 200 moving average is resistance now. I would not think oil is going to go long until we can break, firmly above this 200 moving average with some reason why. Otherwise, I think it's going to be, maybe at best another range trade. All right, let's go gold and silver. So gold, I still like the pullback on gold. I'm still hoping we get a bigger pullback on gold. I'd like to see low 3,000s. So, 3,100, 3,000 on the number would be pretty nice. Consolidation is totally fine, right? If we consolidate here and it just goes sideways, 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 that's fine. Okay, is that enough to entice me to buy more gold? Kind of, but not really. And I just say that because this bar count to me is still the most obvious reason that I'm not long. I'm not adding more at these highs. I'm long on gold. I still have gold positions. I'm still long, but I'm not adding more yet. I really want to see this market try to play catch up with this, 100, 144, 200 moving average if possible. Okay, so I still like gold. If anyone is more short term, you've got some intermediate support in here. If that offers a trade back up, be precise, go down to a smaller time frame. You can kind of scalp that thing back up to highs again, but I wouldn't get crazy bullish. I think that if at best we buy some lows with some confirmation on a smaller time frame, and then see if this range is back up towards 3,400. If you're lucky, maybe it pops back up here towards the high at 35 when it spiked up. But you got to get down to those smaller time frames into the trenches. Silver, pretty sideways right now. I still like silver. I'm waiting to see if we can break this high, If we do break these highs, love silver. Like silver will be, to me, better than gold. Partly because it's cheaper, partly because XAU versus XAG is so lopsided right now. But also like this posture to me still looks very bullish. So if we can get a push and break these highs, I think this open space on silver looks awesome. If we come back down to 29, I still like the support there. I'll probably still add some trades to it. But between 29 and 26, I'm adding positions here as opposed to, getting, excited about a crazy big breakout to the upside. So if you look bigger picture, open space, go back to the weekly time frame. This is why I like silver. So if we can hold 29, hold 26, I'm looking for this thing to break $34, $35 and get a run. Silver could be a nice bullish trade. So I'm going to try to hang on to all of my silver until we get into the 40s, and then I'll start taking some profit. Bitcoin, just over 103. We're nearing some all-time highs, which is exciting. There is some divergence on the daily time frame, so overbought conditions with some divergence, meaning price momentum disagrees. As I said, I think it'd be better for Bitcoin right now, just as far as the efficiency goes, to pull back and find this area. If we pull back and find that area at a minimum, okay, or we pull back to this area to find this as well, I think a bullish move to all-time highs would be better if we check this box and possibly check this box as a swing trade. If we don't, and we just run to all-time highs, I mean, this is exciting, okay, but it also might be a larger accumulation phase. So I still like adding to Bitcoin here if it pulls back. And I could be wrong. Look, we could leave this thing open. We can run to all-time highs. Okay. And then the next big wave is, eventually price pulls back to sub 100,000. If we get to 125, 130, 140, do expect pullbacks maybe in the 100K, So it's just going to continue to have its ebbs and flows. But I think from a purchase point, I mean, I wouldn't mind buying some more Bitcoin here, anything in this pocket as well. If it just keeps going higher, that's fine. But exposure-wise, I'm probably going to let my IBIT run uncovered. NVIDIA's back above 130. That's encouraging. We're getting some NVIDIA love, huh? Look at this bad boy making a comeback. Wow, you really stick it to NVIDIA when you cut the price target from 175 to from 180 to 175. You're showing them. Anyway, back to 130. NVIDIA overall position wise, I've got a collar trade on this one. I think out to June. Let me go NVIDIA here. So I had the shares. 130 is my cover call into July. So I'm still down. My break even on NVIDIA. Let me check the break even here. NVIDIA sold a bunch of premium. I did close out a lot of my, I've got some naked puts in here. So this is up a decent amount, pulled in 260, pulled in 348, up about 67% of that naked put. So not bad. These are like leaps. This is out to the end of the year. May not be a bad thing just to protect it, to be honest. It's a little early. I think if we keep running, but I don't know. This is an interesting surge. I think this is now going to make Mag 7 also get off its butt and move a little bit higher too. So this might not be a bad spot just to take profit. I sold puts like $70 puts. The odds of this getting assigned are slim. But for me to sit now for the next 220 days and hope for an extra $100 versus just taking the profit now and grabbing almost $800, I think I'm just going to take the profit. So if NVIDIA is going to make a run today, maybe I'll just close this out by later today. So I'm going to put this one potentially on the NVIDIA naked puts. So if I close it out, that'll be a nice little win. I've got my collar trades in here. So this is my 130 by 80. 130 by 80. 130 by 80. Okay. So that's how I've got my, I had the downside protected. I've got the covered call at 130. We're trading above it right now. I'm just going to see if it gets called away at 130. Again, it's out to July. What I might end up doing is possibly rolling this, but I need to double check where my break even is. So I'm looking for that right now. NVIDIA, willing to own. Those are all profitable. Earnings, that was a winner. Ratio spread, that was a winner. There we go. 119.68. 119.68 is my break even. If I were to, let me see if I can modify this real quick. So if I take a collar trade here and I roll this call, so this whole position is down. My collar's down. But if I roll this thing, let me see if I can roll. Can I roll this collar? I don't want to roll it out. I want to roll this. Let's take the expiration down a notch. Let's go to the end of June. So I'll roll this down by a few weeks and roll this to like a 1. I could get some credit if I roll it down. So the put side. So I could roll my put side up. Well, if it's going up, I might as well just keep this lower. I don't know. I'll mess around with it. The point is, I can take away some of the time here, roll my strikes down. I'm gonna cap my profits a little bit. So instead of making $11.32 a share, I would lower it to 127. But I lower the time by about 20 days. So 127 minus 119.68 plus another 30 cents. So 762, and the number of shares I have is 500. So 762, I make 38.10, and I'd be out of the trade by the end of June. Not bad. Or I can do nothing and just let it get called away and make, $5 grand. A little bit more than that. So if it was 1132, 500 shares, I make 5660. So if I get a little bit more active, I'm just trying to free up some of the capital. Also, not get stuck in NVIDIA. I mean, I'm sure everyone is probably encouraging like, hey, I think NVIDIA is going to go back to retest all-time highs. I mean, that's totally fine. If this is going to make a run, I mean, now that we're back above the 200-day moving average, this thing is surging once again, which is kind of nice to see. I'd say at this level, it's pretty critical that we stay here or we go higher, right? If we all of a sudden have a rejection on NVIDIA, I mean, and I could be wrong in this analysis, but this low, this low, this low, like once that floor broke, I mean, this trend line could offer some resistance. So I think if we're gonna continue to push higher in NVIDIA, I don't mind pushing to all-time highs. And my collar trade here, I'll just get it closer to expiration and then probably just roll my covered calls, try to generate more income, right? If the price target's at 175, well, heck, if we go to all-time highs, then absolutely I'll just roll my covered calls. I don't have to grab every bit of this. But if I can take 130, roll out another week, grab another, $100 to $200 a week on 500 shares, that adds up pretty nicely, right? So anyway, that's probably what I'm going to do. Yeah, I think that's better than trying to fool with the collar trade and get out earlier if this is going to be a bit of a runner. So what's this doing to mags? Yep. So led by NVIDIA, what's our mags doing? So Apple is sideways. Amazon is still up with some fresh highs today. Broadcom just crushing it. These chip stocks are really running hard. Google, definitely an improvement there on Google, which is nice. Meta, man. Everyone's hating on the Mag 7, but look at it come back. Mag 7 was down 30+%. Now it's up 32% on the recovery. Don't hate on Mag 7. They're going to be good stocks. Netflix back up. NVIDIA ripping it. Tesla 320. Just rolling some calls. Check Spotify. Yep, hanging in there. Okay, so Mag's doing pretty well. Bonds again, fresh lows on TLT. Sideways on IEF. Back to the same lows on SHI. Berkshire Hathaway off the all-time highs. Let's go currencies. We did dollar, oil, gold, silver, Bitcoin. Did mags. Let's take a look at some currencies here. Aussie and New Zealand both doing pretty well today. Aussie CAD. This is why I've been long. I didn't get the pullback that I wanted. I was hoping I had a pullback in here on Aussie CAD to buy another chunk. It didn't fill, but yeah, I'm going to hold this thing up until maybe a sweep of these like 93.50 levels, 93.70 levels. Aussie Swiss looking a lot better. So trade's looking pretty good. Let's see if we get up here into this first chunk, find some resistance maybe at the 200 moving average. But if this is wave one, hopefully a slow pullback. So wave one, a little pullback. I'd love to see a wave three, and then I'm going to get the heck out of this trade for some profit. Aussie yen, right side of the trend line. Talked about the August 5th bottom. Aussie New Zealand also making that scream. I didn't get filled at my 106 like I wanted, so I'm just kind of riding this thing out. See if we get to 112, 113, 114. Aussie dollar, I'm not buying that dip. CAD Swiss looking a little bit better, but kind of the same as the other structure is like, do we get up here first? Do we find some resistance? Is this a bottoming pattern that I can trade? So I'll buy back in again, look for a symmetry trade, get me out at wave three. I want wave five. Like honestly, if it didn't matter to me, timing and money, it's like, yeah, wave five would be great. If I had the patience for a wave five, I think we could still get all the way back up here. But I think a wave three turns me into a pretty profitable position, and I'm going to take it and run with it. CAD yen, yeah, I mean, if you bought the equal lows from August 5th, that's been a great trade. That's up about 400 pips. Swiss yen, leave it alone. Euro Aussie, never got the pullback. This thing just slid lower. Euro CAD, the sell trade that we talked about has been working out. If you'd sold this structure or equal highs, you're up a few hundred pips. I was targeting 5,400. So directionally, it's doing okay. Euro Swiss looking a little bit better. I'd love this low to hold. I'd love to see price get up into this same high. Do I want to take some profit here? I mean, maybe it's a 1, 2, 3, 4, 5. If that's enough, that's enough. I might take some profit there. If it's enough, we'll see. Euro pound, just a complete reset. That's why I love trading euro pound on robots, because it just is a very neutral, efficient currency pair. Plus a slow mover, euro yen's going a little bit higher. Euro New Zealand sliding lower. Never got the pullback that I wanted for that swing. Euro dollar, if you were short euro dollar, like we talked about, the 113.50 area, even reserving a sell trade at 115.50. You got the, I said 111.50 to 110.50, good targets. We could pull back a little bit deeper. Just don't be greedy. If you're short here on euro dollar, don't be greedy. It's okay. Pull back 30%, just shy of 38%. Move your stop losses, trap some profits, grab a few hundred pips. I still like this. If it were to come back into this area, I still like euro dollar long. I really do. But I wouldn't be forcing a short trade, because I think this is actually a bull trend in the making. So if we're going to see a weaker dollar, a bullish trend, I don't want to be stuck trying to short this thing, when the reality is it's more just accumulating to buy the next swing. If this is a pullback to give us a wave 3, you want to be participating in that wave 3. There's a lot more profit to be made there. Pound Aussie, never got the 506 pullback that I wanted. Pound CAD, Euro CAD looks a little bit better. I would stay out of pound CAD unless we came up to reject off the same high, 87, 8800. Pound Swiss, this is going exactly where I wanted it to, which is this pocket, this pocket. If you're long pound Swiss, love that trade. Take some profit off. If you want to hold on to a little bit longer, we obviously can come back to the same resistance. But we talked about buying small and still be willing to buy the lows. So if you buy small, be willing to buy the lows. I just thought there was a high probability of getting like 1250 to 1350 and grabbing some profit there. So pound Swiss, if you're liking that trade, you still got another maybe 100 to 200 pips to go. If you want to trail that thing, we could get up into the 114.50 to 11500, but I would put a trailing stop loss in. Pound yen doing its thing, scalp city, I guess. But it didn't come down to the August 5th lows. Pound New Zealand, I'd say no trade. Pound dollar, again, probably against the grain. I'd like to see if this can pull back just a little bit more. If this structure breaks, then maybe a bigger picture move on the pound dollar. If the dollar's going to get weaker, I think euro dollar is a better trade. New Zealand CAD, I'm still long and holding this one towards highs at 86, highs at 87. I wanted a pullback. I'm still waiting for a pullback. If we get one, we may not get it. I'm just holding a long position. New Zealand Swiss, still riding this one out as well. Would love to see this trade highs, resistance at the 200. So maybe this is all wave 1, pullback wave 2, and then to get a profit for symmetry wave 3, get me out of this trade. So I will take these buy stop levels, probably turn them into buy limits. Because if we come up into this resistance, I'll go buy limit, buy limit, buy limit, and then try to take a wave 3 swing. And I could hold this for a wave 5 and try to get super happy with the net profit. But even taking a add-on trades for wave 3 would still make me a lot of profit. I'd be happy with that. New Zealand yen, August 5th bottom has been pretty nice. New Zealand dollar, it still didn't pull back deep enough. If you're aggressive in this one, that would have been a good entry. That's a small entry. I'd still be waiting for deeper pullbacks with a stop below. You might still get it, but if this runs into open space, well, you can pretty much see that from 58.50 to 63.50, it's open space. So if dollar gets weaker, this thing runs hot. Dollar CAD, I don't know. I hate the dollar CAD right now. It was a great trade in here. We were long, looked to get short. We had a crazy flashy move there. That was when the dollar essentially, broke. So we had a nice swing trade setup where it was left tip, center tip, right tip, right around that 50618 zone, and it did follow through with that swing. So overall, a couple good trades here. Right now, I'm just staying out of it. This is a noisy zone. Dollar Swiss looking a little bit better. I'd still like to see, especially if gold gets a little bit weaker, I'd like to see the dollar Swiss into this zone. So just watching. I hope this doesn't break down too aggressively. I'd like to see this continue to head back up into this cluster around 8,800. If we get on the right-hand side of the trend line, maybe a pullback and then a move up. try to get towards 9,092. I don't know if I want to hang on to it that long. I'd just be happy getting out at 88. My average position is around 8,500. So if I get to 88, I think I'm okay. Just take a profit. The other trades to me look better. My Aussie Swiss, CAD Swiss, Euro Swiss, New Zealand Swiss, those look better. And then lastly, dollar yen. Somebody asked me yesterday, would I still get long dollar yen? And I said no, because the best spot to get long on dollar yen would have been the courage to buy this thing at support with very little risk. Now you're up, 500 pips, 600 pips from the 140 lows. I mean, you've got a almost 800 pip move. I would not be chasing this thing at this level. So if you missed support, this is not the spot that I want to buy the dollar yen 800 pips later. I mean, could this continue to go higher? Yeah, sure, maybe. But it's clearly run into some support to become resistance, right around that like 148, 148.50 handle. But if you miss the support trade, like, don't chase this thing. I mean, I don't know what this is going to do. Is this going to hit support to become resistance and push it back down? Maybe. Is this going to be a bullish trade to set up again and then swing back up to the same highs here? Maybe. That's the dollar yen, right? We still have this huge range all the way from 162 down to 140. Does it just stay in that range? So I think there are better entries if you missed it. Wait for a better setup. So, all right. I think that'll do it for today. Chandler and team, we good? Any other? Is there another guest coming on? Otherwise, if I'll wrap it up there. Go just a few more. Any final requests? A couple more minutes. Did a little bit of everything. Markets for the day. We're still up with a little push this morning. 0.77% on S&P. 1.46 NASDAQ is ripping, mostly on the coattails of Mag 7. NVIDIA is doing really well today. Chip stock's doing really well today. Take a look at the heat map. Let's go FinViz right there. So the heat map today, NVIDIA, big winner, 6.13%. Semiconductors doing really, really well. Micron, I took a lot of profits on some of the premiums that I sold during April. Amazon's up, Meta's up. I mean, Mag 7 doing okay. Microsoft is flat. Google, nice to see a bit of a turnaround of Google. Meta's ripping pretty nicely. Tesla obviously above $300. So all in all, not bad. Healthcare just getting smacked. Johnson & Johnson, I actually put on a trade yesterday on Johnson & Johnson. Take a look at that. I was looking at a volatility play. So right now it's up on some puts. Let me go into an individual account here. So I'm up about 5% on this trade. This is a pinch trade. So I've got a 140 naked put. This is my pinch trade right here. All right, I'll get that organized. So just keeping a eye on things. That pinch trade set, that can't be right. Oh, this is incorrect. Let me go on group. So it's the $150. So the 130 is my naked put. Yeah, so the expiration there all 66 days. That one is my pinch. There we go. There's my pinch trade. There's my pinch trade. All right, anyway, I'll keep this organized. But I was looking for a volatility play on Johnson & Johnson, and we're kind of getting it. So being dragged lower by United Health Group. And if this goes down into, some 144, some 140 levels, that's a pretty good asymmetry trade. I was risking about $3.98 to make $10. So over 2-to-1, which I'm pretty happy with. If I turn it into 75% profit, 100% profit, return on risk, I'd be good with that trade. So we get back down to these lows at 142. That should pay somewhere between $5, $6, $7 out of the $3.98 risk. So put a chart alarm down here at these lows. Keep an eye on that one. But healthcare would be your lagging sector today. Real estate, also red, but healthcare getting beat up bad. UNH down 16+%. Everything else a little bit more manageable, but still not great. Okay, I'll let you go for today. Have a good rest of the day, and we'll see you next time. Thanks, everybody.